Ladies and gentlemen, today is the day. Today is the day that Alphabet settles all scores. Settles all scores for the market. Are they going to deliver what we are expecting? Are they going to confirm the bear case? I got to tell you, I don't know. And the blanket behind me is annoying me. My nephew was in here reading, and the blanket is annoying me because I see it in the background. Thank you, everybody, for being here. Appreciate it. We got a packed show. Rusty, how are you? Joni, how are you? Chels was not first. Tommy Dimes is big on Lumen. Rusty Parzival, Jets Dad, Star, Big Dog Jello. What is going on? Hopefully, everybody's having a good day. Gonzo, how are you? I saw the news. I actually talked to Chris on the phone. I'll see if Chris wants to come on at all. I'm not sure what his schedule's like. We had an interesting conversation. I respect the decision. So, let's get started. We got a ton of stuff happening. We have the Iranian war escalation. We have a Saudi nuclear deal. Oil markets raging. LNG. We have the Fed. It's a lot. That's just before we even get into the markets. AMD and Anthropic, AMD and Microsoft, Supermicro, Reddit versus Google, GE Vernova, SpaceX. And then the big one, Alphabet. You got AT&T. Some people care, some people don't. AT&T beat by 6 cents this morning, but revenue missed. Does that mean that SpaceX is going to be competition? Maybe, maybe not. I think warning shots are being fired across the market, and everybody's on pins and needles waiting to see what Alphabet will do. Now, where are we this morning? Rocket Lab, up 5%. CoreWeave, getting a bump, 83.50. It's up almost 5%, ladies and gentlemen. It's a runner this morning. It is a runner. Venture Global, 1462. Like I said, the LNG story, bigger than... Okay, I got to stop. I don't even know what this word is that Amit has everybody spamming. Like I said, I'm not that smart. Komorabe. It's a song by Robbie Seed. Who's Robbie Seed? I don't know who Robbie Seed is. And according to GitHub, it allows you to control application windows, virtual workspaces, display monitors. Could have fooled me. I would have never known. Learn something every day, ladies and gentlemen. Learn something every day. Like I said, I'm not that smart. I can guarantee you his word of the day, I most likely have never heard of. Okay, we got oil cracking 86. Not good. I actually think it cracked 87 at one point this morning. We're going to discuss the oil markets and make sense of it. I went through everything overnight. Torshi, thank you very much. Really appreciate it. Went through everything overnight, and it's a serious situation out there. It really is. NVIDIA getting a pump heading into Alphabet earnings. 517 to 1238. I'll take it. Nice big green candle. Qualcomm, 177. Maybe we hit a bottom, maybe we didn't. Nebius 222. Next decade 751. Marvell 212. Netflix is 70. Coming back from the gutters. AMD 555, trips. Time to go play 3-card poker or CeeLo. Third best dice combination in CeeLo. And a 30-1 payout. 30-1 payout on 3-card poker if you hit trip fives. Verizon, 44.53. Broadcom feeling a little bit of love this morning, 391. Cisco, 113. I like Cisco a lot here. SpaceX, 124.55. Who are the big losers? Reddit, oh my God, 167.10, getting crushed. Palantir down a little bit, 126. ServiceNow, 96.96. Let's see what Chris is doing. See if he's sleeping or not sure. ServiceNow falling. We had some news out of there. Zeta 2048. Salesforce taking a hit also. SAS is taking a hit. Lululemon, Dr. Burry Company, 113. You got Wix under 50. You got Rubrik, 73.63. Strategy lost 100. Then you got Microsoft and Meta just trading too low. SoFi, 17.27. CrowdStrike, 187. Fortinet, 155. Whew. We got some things that are working, some things that aren't working. Oracle hanging in there. I don't mind Oracle right now. 125, maybe I buy more by the time this session's over. We'll see. We will see. Bitcoin, even keel, not that bad. So let's start with economics. Start with what's going on. Last night, here's the big thing. Last night, we can go in a couple of different directions. There's a lot of stuff to cover, but let's get this out of the way. The reason why this is so important, if you go to nowflation.com, we keep ticking higher. Oil is a ticking time bomb. Yesterday it was 2.04%. Now the inflation gauge has us at 2.07%. This keeps going up. When we first started this site, it was 1.73. We got the next CPI print 20 days from now. 20 days from now. So we're going to see what happens. I think the next CPI print's going to be good, but you know what? We're going to get head and shoulders. We're going to get another dip up. We can get another dip up, inverted, because oil is around 87 right now. That is not good for inflation. This is what's going on overseas. We got two Wall Street articles dropped last night. Iran proving its missile arsenal survived the war's opening phase. You got Trump approving a 30-year civilian nuclear deal with Saudi Arabia. And you know what? Some are saying the U.S. is fighting a war it can't win. Maybe, maybe not. Here's where we stand. February, look, Khomeini was killed. June 17th, the memorandum ended the first phase. And now, full-scale fighting. We're in the 11th or 12th day now. The U.S. just completed almost 2 weeks of consecutive nighttime strikes in Iran. Iran went and hit, and I'm going to get this wrong, Musafa, Salty Air Base in Jordan on Friday, killing 3 U.S. soldiers in a strike. A fourth service member was killed in Iraq during a controlled detonation of unexploded ordnance from a downed Iranian drone. So far, the war has cost roughly $37.5 billion. And more F-16s and F-35s refueling tankers are heading over from Europe. So this morning, Trump posted that the U.S. will bomb and destroy one Iranian bridge or power plant, including in or near Tehran, every time Iran shoots at a ship in the Strait. This is what it's come to. Now, he also says the U.S. will likely strike Pickaxe Mountain. His exact words were pretty soon. The underground site where Israeli intelligence believes Iran buried its advanced enrichment centrifuges. Mediators are floating a 10-day ceasefire, but Washington is downplaying it. I mean, there's a lot to unpack there, and there's a big credibility gap. I mean, Hegseth continuously has said Iran's missile program functionally destroyed. I mean, that's been going on since April. Iran's underground missile sites were supposedly eradicated. I mean, we're going to see what happens. Iran's strategy is basically cost implosion, bleed the U.S., push Trump back to the table, and keep leverage over the strait. And then you got Trump's counter. It's explicit, tit for tat. One bridge or power plant destroyed per ship attack. This is a shift from hitting missile bases. When you have a population of 92 million people, taking out power plants, I mean, I don't even know what to say. Look, regardless of what you think, you don't want civilian life to be harmed. You don't want innocent civilians to be harmed. Unfortunately, this could rage forward. And look, this is having a huge impact on the oil markets. Brent, let's bring up a chart of Brent right now. This is the worst possible time that this could happen is happening right now. So we got WTI, and we'll go with WTI instead of Brent. Sharp increase. I mean, we got down to 67.74, and we're up $20 per barrel in a very short time. Not even a month. Okay, not even a month. So the 52-week range is saying everything. We were traveling in the high 50s. We got above 110. We got down. And this is why I said inflation rolled over because of the oil markets. But guess what? The print will likely be good this month. Next month, it's going to probably be bad again. Now, we all know, we've been saying it for a while, the Strait of Hormuz carries 20 million barrels per day, roughly a fifth of global oil consumption. Weekly transits are down 66% right now, 53 versus 157 the prior week, according to Lloyd's List Intelligence. Tanker and gas carriers crossing fell from 90 to 30. At least 9 ships have been attacked since July 6th, as Iran tries to force traffic through its own territorial waters. Now, Trump just tied every future ship attack to an infrastructure strike. We're going to see if that works or not. I have no idea. This is becoming a dual choke point problem. And the asymmetry is indicating a month plus full closure is going to push crude back into the triple digits. I mean, we saw 115 or so on WTI and more than 120 at the height. This can absolutely go back to triple digits. And like I said, this is happening at the worst possible time because the Fed is undecided on what they're going to do. You have a very split Fed right now. And if oil keeps going, we're getting a rate hike. I mean, I hate to say it. I don't want to say it. I'm Captain Cut because we need rate cuts. It's very hard to see a world where if oil gets past 100 again and stays there, that the Fed doesn't hike rates. And it'll be hiking rates for the wrong reason. But with how skittish they are, I could definitely see some of the people that plugged in 2 and 3 dots on the plot convincing some other members, unfortunately. Now, liquefied natural gas is getting a bid. It is getting a bid, and that's why you're seeing Venture Global do well next decade up and down, because Iranian missiles damaged Ras Laffan in March, and Qatar Energy declared force majeure for up to 5 years on some contracts. 20% of Qatari LNG capacity will take years to repair. Now, this is great for U.S. LNG terminals that are running at 94% utilization. But at what cost? This isn't how people want. I don't think this is how people want to make money. personally. Now, Europe made a lot of bad decisions, in my opinion, and they head into refill season with TTF back to 50 euros. Goldman's flagging 74 euros. Depending on what happens, Asian LNG is spiking. LNG, for all of you that got into next decade and listened to Chris and Matt when it fell into the single digits, you guys are doing well. I'm sorry, not next decade, Venture Global. I get the two confused sometimes. Like I said, I'm not that smart. Venture Global is a powerhouse. And as they bring additional trains on, they're going to capture more of the energy infrastructure. You look at the EIA report, they are projecting that we see more LNG utilization. That's why I like pipeline companies. But the exporting companies have a long runway. And I bring this back to the Fed because the Fed is currently holding rates, and we thought the war had collapsed and rate expectations could come down. I don't know. I don't know if that's going to hold true anymore. I mean, this is a problem for the market. So we're going to have to really watch this. We're going to really have to watch how the oil markets play out because, look, I know all of us, including me, love technology. But you know what? We can't just look at technology. And you have to look at what is going on a macroeconomic level. You have to look at what's going on a global economy level. And we're going to get into a lot of things tech in a few minutes. But it's important to go over the macro trade because you know what? Oil controls the narrative. If inflation goes up and rate hikes go up, there will be a perception that growth is going to be hitting a standstill. That's not good. That is not good. Exactly. Stock market is run by tech. Who cares about other stocks? Well, I agree. The majority of the market is tied to technology, and every company utilizes technology. The problem is oil touches everything. It creates input costs going up. It creates cost of capital going up. And if there is a bottleneck in energy, you know what? It's going to be even harder for data centers to get the energy they require to come into service. So you have to care about energy. It's incredibly important. Incredibly important. Energy is one of the most important things in the market. Now, the Saudi nuclear trade, 30-year deal worth tens of billions expected to be signed today. Okay. Westinghouse AP1000 is the centerpiece, 1,100 megawatt per reactor, enough to power a mid-sized city. Westinghouse is private, so is Camco or Cameco, whatever it is, CCJ. A lot of you like that company. Is the most direct listed play, 49% stake, and Brookfield, the other 51%. This could be very good for those companies. Even Centrus, LEU, speculative enrichment angle. I mean, these companies can do well. I mean, there's no doubt that this is going to get signed in my mind. And nuclear is going to come back. It's going to get popular again. I wouldn't be surprised if we see Oklo and if we see SMR start to catch a bid and people really talk about small modular reactors, et cetera, et cetera. But CCJ is interesting. I got to do some more research on it. But this 30-year deal with Saudi Arabia is just another reason why we need to take nuclear seriously. Now, let's get into technology, what all you want to talk about, okay? I'll get to service now. I will get to it. Let's start with AMD, okay? So AMD announced that Anthropic will deploy up to 2 gigawatt of their Instinct MI450 GPUs in the Helios rack scale system, with the first gigawatt landing in the first half of 2027. Guess what? First half of 2027 could be January, February, March, 6 to 9 months away. I mean, it is really not that far away. I can't believe we're already more than halfway done with 2026. I can't believe it. Now, AMD has been an incredible investment. I salute everybody for getting into it. I did not. Look, you guys know my story. I'm a little jaded by them. It is what it is. It is what it is. But you know what? People who invested in AMD are killing people who invested in NVIDIA, such as myself, over the past year. And that's okay. I think AMD is still going to win. I think this is big news. I also think it's incredibly important that AMD is committing up to $5 billion in strategic equity in Anthropic tied to deployment milestones. This is going to be AMD's first investment in Anthropic. Now, let's put this in relative terms. 1 gigawatt powers roughly 750,000 US homes. So this is utility scale compute, and it builds on Anthropic's existing usage of AMD's MI355Xs. In addition to using NVIDIA, in addition to using TPUs from Google and Amazon. Now, AMD popped yesterday, and it's up another 2%, $555.04 and ticking. I think this is a great company. I think it can go further. Now, this wasn't the only deal this week. We also had AMD announcing that them and Microsoft will be deploying Hilo racks also in next-gen EPYC across Azure for AI inference. This is another deal joining Meta, OpenAI, and Oracle. AMD has deals with everybody. And you know what? Wedbush called the Microsoft deal a precursor to a sharp ramp in AI deployments starting in the second half of 2026 and running into 2027. This is not NVIDIA or nothing, okay? I really do believe this is a trifecta between Broadcom, AMD, and NVIDIA. We just need so much more compute. There's no question in my mind that we just need more compute. And the one story that I'm interested in discussing is the OpenAI model that went rogue. We're going to have to discuss that in a little bit. But the reality of the situation is that even though companies are signing on with AMD, NVIDIA still holds 95% of data center GPUs. That's the reality. Now, there's a pattern in this story. OpenAI, 6 gigawatts, Oracle, Meta, Microsoft, now Anthropic. Hyperscalers are deliberately building a second source, as Chris would say. They don't want to pay the NVIDIA tax. I think it's going to come down to two things. I think it's going to come down to which chip is better and how much can they get of it. And how much better is it? If it's not that much better, I don't know. These companies are going to buy whatever they can. We're in a compute arms race. Now, NVIDIA, I think, is going to do fine. Please buy AMD for $3 for me. My cost basis was a little higher, is $367 or $368. So I doubt I can buy it again for that much. That was a big mess up in my investing career. Out of everything that I've owned, that is the biggest blunder. There's no question about it. There is no question about it. Biggest blunder. Biggest blunder. It is what it is, though. It happens to everybody. Everybody's got stories about stuff that they sold too early. Put in the chat, what did you sell too early? I can't be the only one that sold AMD or something like that incredibly early. Now, I like NVIDIA. I have a large position in NVIDIA. I do not have a position in AMD. I do think Qualcomm is extremely interesting. And if we round this story back to Qualcomm, the AMD ramp is expected 2027. These companies are looking years and years out. And then you have companies like Qualcomm, where Zuckerberg and Nadella from Microsoft come on their investor day and say, these server CPUs are so good, we're going to enter in a deal for multi-generational. Now, Qualcomm's taken a hit. It looks like it may have bottomed earlier in the year. It's taking a hit off the recent highs. I do like it from a dollar perspective. It's extremely exciting. Ray, what is going on, Ray? Ray, I got to ask you, on vacation, did you happen to have chocolate croissants and a cappuccino over in Italy? I need to know. I'm jealous. I would love a chocolate croissant. I would love one. The bakery right downstairs is heroic. They make these chocolate croissants. Oh my God. They look like mini footballs. They're so big. They're so big. Incredible. Incredible. And then we got SMCI, which we'll get to. Oh my God, Ray. So many pastries and coffees. I'm with you, man. Pastries and coffees, get after it. Get after it. AMD was advanced money destroyer for many years. I'm with you. I swing traded for a long time. For a long time. And I got caught. It is what it is. I got caught. But I do think that there's a play in chips. I think that tonight we are going to get some validation. So let's roll into Super Micro, which I don't have on my list, but let's put it on for all of you. Super Micro. SMCI is up 24%. Ladies and gentlemen, who has that? Somebody has that in the combine. Was it Captain Sleepy Time that took it? I think he did. He did. Tanner took SMCI. That's right. That's definitely helping him out. He's still in second place. Definitely helping him out. That was a great pick by Tanner. I mean, I don't know that anybody else was really thinking that. I actually like that pick a lot. So, what happened? Preliminary Q4 numbers came out after the close. They're now showing GAAP and non-GAAP. You know what? Hold on. I'm going to shut up for a minute. I want to hear this. I think everybody is going to be interested in hearing this. Let me back it up just a tick. All right.
Welcome back. An OpenAI model went rogue and hacked into another company all on its own. Kate Rooney has the details, Kate, and the ramifications of this.
Yeah, Sarah, so OpenAI is now claiming responsibility for what they're describing as an unprecedented cyber incident. The short version of all of this, OpenAI's models went out and hacked another company during a test run, which is known as an evaluation. It was essentially experimenting in a closed sandbox. It didn't have any internet access, but the AI found a way around all of that. It knew that the startup Hugging Face had the answer it was looking for and the data that it needed. It escaped that sandbox and then found a new vulnerability, exploited that on Hugging Face to get the test answer that it was out looking for. Hugging Face is an AI startup. It's backed by Amazon, Google, NVIDIA as well. It did disclose this last week, guys, but said at the time, didn't know who was responsible. OpenAI now saying it was us. They are investigating the incident. Another wrinkle in all of this, Hugging Face says it was actually trying to use some of the best American models out there to fix this and defend themselves, but it was actually blocked by the guardrails out there. It actually had to use an open source model. It does all highlight the debate right now in Washington and Silicon Valley about cybersecurity as these AI models get a lot more capable. And then who should actually have access to these models? There's also been a lot of attention on open source. We've talked about moonshots. Kimi, K3 out of China, it's seen as on par with the American labs in the US. The White House just confirming what many suspected, claiming Moonshot copied Anthropic. This is known as distillation. They say they do have information that Moonshot was stealing proprietary U.S. technology and then undermining American research. calling it unacceptable, guys.
We had just had a discussion about how ostensibly what was impressive about Kimmy was that it didn't distill, and then that post appeared. That was a bit of a surprise.
Yes, it was. I mean, there had been rumors, there had been expectations that this was happening, and Anthropic has complained about this. They've accused Alibaba of doing this. But the other side of it was this model was so good and it didn't use Anthropic. Now we apparently have evidence that they did, and there's almost no way to guard against it. You know, regulation can't do this. This is strictly forbidden in the terms of service. The AI companies are very much playing whack-a-mole and trying to guard against this, but it's getting harder and harder, and clearly there's big global ramifications.
Yeah, I mean, I wonder if there can be punishments or something like that to dissuade them. I was following a thread Nikesh Arora, the CEO of Palo Alto, actually posted today on X about this whole incident. I mean, not necessarily about his business, but, you know, with some tips, both for enterprise and, you know, he says, dear frontier models, direct the models to your infrastructure code and configurations to evaluate and understand, you know, if there are any 0 days or misconfigurations, you know, kind of a list of sort of what to do, but ultimately concludes that this validates the power of these models, and we're in a new risk world.
It validates that. It's exactly right, Sarah. It's for chief security officers. This is a wake-up call, and OpenAI, in some ways, underlining that with this, saying, you know, they were just in a testing sandbox, and it got out and did this. So a wake-up call for corporate America, definitely.
Kate, and we'll talk, I'm sure, more about the Hugging Face story too in the coming days. That's our Kate Rooney. Meantime,
okay, this is why cybersecurity is so important, everybody. This is why we have to take this seriously. And yes, Insight, thank you very much. I appreciate it. I don't follow SMCI religiously the way that I follow other companies. I don't really follow Dell or Hewlett Packard, but I do pay attention to what they say sometimes. So that's why I did bring it up. But you're right. I really don't follow them that much. Now, cybersecurity has to catch a bid at some point, because when you're in a situation where these models are getting so good that they can just find a way to hack everything, it makes me wonder where Sarah Connor is. We need to protect Sarah Connor, okay? We need to protect Sarah Connor at all costs. And I'm hoping you guys know what that reference is, because somebody said Skynet is coming. It could. It could. I don't want to. I mean, we just saw Dana White videotaping robots punching his hand and stuff. So I do believe cybersecurity, we are going to see a lot more companies spend on it. We're going to see the cyber attacks get way more sophisticated, way more. It's going to be very interesting to see how this industry transforms and evolves. Because you know what? Mythos and Soul 5.6 will not be the last models. They just won't be. Terminator movie is where you find Sarah Connor. That's right. We need Arnold. I can't do an Arnold impersonation. I just can't. But yeah, we need Arnold. Now, when you think about where we are on this, the fact that it's figuring out ways to jailbreak, figuring out ways to get past the guardrails, I don't know if we can actually figure out real guardrails to put on AI at this point. I'll be back. I love that. I'll be back. I can't do it or I would. Get to the chopper. Oh, the movies in the 80s and 90s were so great. Oh my God. Now, some cybersecurity companies got hit really hard during the SaaS apocalypse, but they are really in a prime position because there's only a handful of them that are really good. So, of course, right as I start getting into it, they are discussing what is the most important thing of the day. So we're going to get into it right now. We'll come back to cybersecurity.
Away from the companies funding this AI build-out. Alphabet is the clearest stress test. CapEx more than doubled last quarter. It's raised more than $140 billion in debt and equity, and free cash flow could flip negative next year. The street needs proof that demand is catching up. Cloud growth expectations are north of 60%. Backlog is $460 billion as of last quarter. And investors need to see capacity coming online without margins buckling under higher component costs. Google also playing from behind at the cutting edge of frontier AI, but it's undercutting.
All right, look at the model pricing. Fable 275, Opus 180, Sonnet 153, Mistral 120. Soul is $1.04. Crazy how much cheaper OpenAI is than Anthropic. Now, I do think this is going to be a race to the bottom. I do think that we're going to be in a situation where these companies will do well, but tokens will be looking more like oil. I've been saying that for a few days. And I'm taking that reference from Chamath because it's just the best analogy you can make. Because gasoline is roughly the same price no matter where you go. It just depends if it's high test or regular. And I think you'll use these tokens for certain tasks. And I think everybody can win. Now, Alphabet is the big one. It is the big one. We're going to see what happens.
Chinese open source rivals on price. The question is whether that can pull more enterprise workloads into Google Cloud and what the economics of powering Apple's Siri ultimately look like. Another CapEx increase is expected. How the stock reacts could either reinforce confidence in the hyperscaler build-out or undermine it. And of course, search still accounts for the lion's share of revenue. So we'll be looking to see if it hits that street target of $63 billion. Leslie?
Yeah, Mac, really critical report. Thanks for staying all over at Mackenzie Sagalos for us. Joe, I want to turn to you. You're a shareholder. What's the key thing you're looking for from tonight's report?
Oh, it's clearly, are we monetizing the spend via cloud growth? And can that cloud growth come in much higher than the consensus expectation of 63%? Can we touch the whisper number at 70%? And then what's the impact of the internal usage for TPUs, the tensor processing units? Does that mean that CapEx is a little bit lower than some of the hyperscalers? That could certainly ignite further gains for Alphabet. Collectively, though, as it relates to the AI universe, memory names, semi-equipment, and the momentum factor itself, we want to see a continuation of the hyperscaler spend. The offset of that ultimately is that hits the restart button on the pause, and it allows the momentum factor to refresh.
So, Weiss, the whole construct of Alphabet's earnings seem to be show your ROI and then tell us what you're going to do on CapEx, because without that ROI, CapEx, it could go either way, right?
Right. You're suggesting the ROI on the CapEx.
Yes. Prove the ROI, and then we'll give you a pass for higher CapEx.
Because they do have a great ROI on their other investments. Look, right now the base case is that spending will increase more moderately than we've seen on AI, more moderately we've seen in other quarters, and that's true across the hyperscalers. Hopefully it won't be what OpenAI said they're going to increase their spending by, which is 25% in that announcement today. However, look, there are multiple levers in their earnings report. There's YouTube, there's search, right, which is ads. So they have the and cloud. So they really have the ability to show ROI continuing in those other areas, right? And any one of them being off or up outside, as I'm talking about, will basically neutralize somewhat of the ROI specifically on cloud, on AI spending. At this point, the market has to believe, right, that you're going to get a return on your AI spending. And I think they become more patient. And the narrative, which I think was really a stupid narrative, which is that, where's the return on it? Where's the return on it? You just started spending. You don't get a CapEx return CapEx until you spent for a while and build what you need to build. So I'm not as worked up about it. I think it's a great company with an attractive valuation. So I can't tell you that if they increase CapEx markedly, or if they don't specifically say, here's our return on investment in CapEx, that the stock won't go down. But I'm just not worried about it, right? Because you can't manage this cycle where you're seeing the biggest uptake in a technology ever, including the internet, which is free, and just say, hey, I'm impatient because it hasn't happened yet.
Yeah, the question is...
Listen, that's a great take. And I think a lot of investors today are impatient. You know, one of the things Chris and I were discussing this morning when we were on the phone, he has not texted me back, so I think he's sleeping right now. We were discussing how it's funny that the market has changed so much with investors that they don't necessarily want compounding earnings. They don't necessarily care that a company has paid a consecutive dividend that has grown year over year for 25 to 50 years. It's a much different market. Just because CapEx goes down does not mean that Alphabet is not profitable. I'm sorry, the CapEx expands does not mean that Alphabet is not profitable. Alphabet is still compounding earnings. And you have to invest in yourself to generate forward profitability and revenue. CapEx deployed now doesn't just increase revenue next year. It increases revenue so many years in the future that it is well worth spending the money. Well worth it. Well worth it. Now, exactly, that's for boomers, only momentum. That's what people want, momentum. And there's a lot of stocks getting beat up now because they're spending on CapEx. Alphabet's not necessarily one of them, but I'll tell you, I don't think that they come out tonight and do anything except validate the bull case. I just can't see it happening. Can't see it. We're going to go through cybersecurity plays after this segment. We're going to look at the entire sector before we get into anything else, because after what OpenAI said, cybersecurity is going to be very important.
How long the patience will last. Liz, how important is the read-through from Alphabet into everything else, semiconductors, the rest of the hyperscalers? Are there parts of this report that could be idiosyncratic and the rest of the market ignore, or do you think this is so critical that it will impact kind of the broader, at least momentum names that we've been following?
I think it's critical. I don't think it's necessarily the one that the entire market hinges on. And there are a lot of different, as Steve mentioned, a lot of different revenue lines and a lot of different idiosyncrasies in that particular stock. However, when you look at just the theme in general and the momentum of the theme, the fact that the market right now is showing the most dispersion that we've seen in a long, long time, maybe even decades, it's really difficult to choose which stocks are going to do well, which stocks are going to do poorly. And I actually respectfully disagree with Steve's point a little bit that when you look at the ROI of what's coming out of AI spend, I think that is the most important. Even if there is ROI from other business lines, it might help the numbers come in okay broadly, but I think it's most important where the ROI is on AI. And to your point, how patient will investors be? When you look at the fundamentals of these hyperscalers and free cash flow that we're expecting, the story had been for such a long time, well, they've got the free cash flow to spend. They don't have to go and borrow. That story has obviously changed. And in 2027, broadly, free cash flow is expected to turn negative, actually, for the hyperscalers. So the patience actually needs to happen until 2028. That's what expectations are when free cash flow finally picks back up again. That's a long time to wait for a lot of people.
Can I just clarify my answer? Because I don't think we disagree, actually.
Okay.
There will be an ROI on the AI spending. I don't think you see an ROI in the correlation to the spending that they've done that's going to be all that meaningful. So they do have to show ROI, but it's way too early to know what the significance of that ultimate ROI is going to be. If they don't show any ROI at all, then obviously that's going to be an issue. But it doesn't have to be a lot, is my point.
Look, we're going to come back to this in a sec. I mean, let's really call a spade here. Free cash flow is just one indication of profitability. It is just one indication. If we look at this on an earnings basis, the street still believes, or let's look at it like this. When it comes to Alphabet, okay, if we look at their income statement, their earnings per share have absolutely exploded. You're talking about $4.59 in 2022, $5.84 in 23, $8.13 in 24, $10.91 in 25, $13.25 in the trailing 12. This is an earnings compounder. It's an earnings compounder. Should we get all crazy because they're spending money. Oh, Jake Rizzo. Tonight, I'll be live at 8 o'clock, Jake Rizzo. I need you to tell me tonight what you think of the earnings call from Tesla. We're going to compare notes tonight. Now, basic EPS, Alphabet's a compounder. Earnings continues to go up and to the right. Price follows earnings. If we look at what the street is projecting, I think next year's earnings are very light. I think that we're going to see this number increase a lot. And I think we could see 2028 increase a lot. I mean, you're talking about a company that has projections from the street of double digits except for next year. I think this number is wrong. I really do. I think that they continue to be an earnings compounder, and we're going to find out tonight. And I'll tell you this, I don't see an environment where they take their foot off the gas. I see an environment where the backlog or RPO increases $50 to $100 billion. They say that they can't stand up data centers quick enough. They talk up the TPU multi-generational deal with Broadcom because they will likely frame it in a way that puts them in a light of we don't have to wait for every single thing NVIDIA does. We can innovate on our own also, and we're going to have a happy marriage between the NVIDIA Vera Rubin systems and our TPUs that we're designing with Broadcom. And I don't think there's anything wrong with that. And I think they will continue to compound. At the end of the day, Alphabet's the most vertically integrated company. I think it's undervalued, and I think they're a long-term winner in the AI race. But their earnings tonight is so important for the AI revolution because they're either going to validate the bear case or they're going to validate the bull case. And I may be 100% incorrect. And if this call does not come out how I think, I'm going to have to rethink my entire thesis about the market.
Likely is it that's, is that something that you think is on the table, Jenny, that especially as we look at the competition from the Chinese open source models, this construct of kind of revaluing these companies, as Liz was talking about, to ones where, they are capital intensive and they do have a lot of debt now that's not necessarily borrowed against their free cash flow. It's, is that something that we need to be considering?
I think you need to, and it's interesting for me because if you think about the kinds of stocks that I invest in, they're old school, they're high free cash flow. Every single one of my stocks, every single company that I'm invested in, if they say we're going to spend $10 billion on this project, they need to tell you in that moment what they expect the ROI to be. They don't get a hall pass, right? And so they don't need to say, hey, we're making that ROI, but they need to tell you what they expect. And so all these hyperscalers have really gotten a hall pass where it's just like, okay, leap of faith, great. You're going to make money. You've done it before. We don't need to hear the exact numbers. So I think it's interesting thinking about like how different that is versus what I invest in. And then with respect to Google setting, or I know we call it Alphabet, sorry. With respect to Alphabet setting the tone, I've really thought about the whole Mag 7 or the whole top 10. And it's tough to think about the tone when you see how much divergence there is even in the top 10, where you've got an Apple up 20 and a Microsoft down 17. So I think there's it's so company specific that when you're asking that question, Leslie, I was wondering to myself, who precisely do they set the tone for? Because we're used to, over the past 5 years, the top 10 setting the tone for the top 10.
Right.
And now it's like Google's reach for where they're setting the tone would be so different than it's been in the past. Like, do they set it for Micron? Do they set it for Cerebrus? I don't really know right now, but there'd be much more nuanced, and that's hard for investors to deal with. So I think
I'm not really thrilled with Jenny Harrington's analysis. I mean, look, it's not the same market it used to be. I think we all know that. This is not the same market. And the hyperscalers are spending a tremendous amount of money And it's going into what are arguably the greatest picks and shovels of a generation. So let's look at where the picks and shovels are in relative value to the hyperscalers and where we're going to get a better deal right now. And then let's look at cybersecurity. Let's look at where we can make some plays and try and make some money on this. So we look at the forward EPS. Let's 86 this. Let's do NVIDIA, AMD, Broadcom, Qualcomm, Google, Oracle, Microsoft, Amazon, Micron. Who did I miss? Meta. Let's look at the forward numbers. Let's see what's going to happen. Keep in mind, these are not my numbers. I pull these from the street's estimates, okay? I mean, kind of bullish, right? Here's the crazy thing, okay? Here's the crazy thing. We have Micron, from a hardware standpoint, we have Micron, Qualcomm, NVIDIA, Broadcom, and AMD. From a hyperscaler standpoint, we have Oracle, Microsoft, Meta, Amazon, Alphabet. If we look at the forward numbers, the most expensive company is 30 times forward earnings with AMD. I got to tell you, I think there's a lot of deals here. Is Micron a screaming buy? Honestly, I don't think Micron is overvalued here because I don't think that after 2028 earnings drop off. I mean, paying 13 times this year's earnings when they're expected to grow 128% over the next 2 years, kind of inexpensive. Oracle, I mean, paying 15.7 times this year's earnings, 8.2 times forward, got it cheap. And then you got Qualcomm and NVIDIA, both under 14 times forward. I mean, NVIDIA is just so undervalued here. In what world do these companies stop spending money and it flow into? Here's the thing. The hyperscalers are spending a tremendous amount of money, no question. But that money is flowing to these 5 companies. And then as they continue to spend, because these 5 companies are not going to stop innovating. Look at Intel and AMD. Look at their CPUs over the past 2 decades. Did they stop innovating? No. Does everybody still buy new computers? Yes. Does everybody still buy new servers? Yes. My prediction is this is just a round robin that continues going forward, that the hyperscalers continue to spend to make everything better. The picks and shovels make money, and the hyperscalers are on a 1 to 2 year delay from monetization of the CapEx that they spend. But if you're bearish on the market, I don't know what to tell you because this does not look expensive to me. It just doesn't. Meta, 19 times this year's earnings. I mean, if we just look at 2026, Micron, Oracle, Qualcomm, and Meta are all under 20 times earnings. And then you have Microsoft, NVIDIA, and Alphabet under 25 times. Now I'm going to do it. I'm going to put Walmart in here. Should any of these companies really trade at a lower valuation than Walmart? I mean, come on. What are we doing? What are we doing? It's kind of crazy. It's kind of crazy. I mean, if we put McDonald's in, where are the golden arches? Oh, you know what? I need a comma, not a period. McDonald's is right here. So you're telling me with 16.6% growth over the next 2 years on earnings, Meta, Broadcom, Microsoft, NVIDIA, Qualcomm, Oracle, and Micron should trade at a lower valuation? It's crazy talk. I think that the market's undervalued, quite honestly. I still believe that we are in a situation where we get to 8,000 this year. And I think that we're seeing monetization pay off. Now, I want to show everybody this. Very important. JP Morgan's Stephen Parker was on CNBC today. Remember what I said about Jamie Dimon and JP Morgan Chase? We're seeing signs that AI investment is beginning to pay off, says JP Morgan Stephen Parker. Let's see what he says. Let's see what they're saying.
For more on the market, Stephen Parker, co-head of global investment strategy at JP Morgan, a private bank. That just sounds to me kind of conservative. And I saw what Jamie's saying. You don't structure what you think based on the chairman's feelings about the stock market, do you, Stephen?
No, I think you have to remember that great bank leadership teams think about risk through a different lens
He's a great risk manager,
than long-term investors.
But you got to admit that there are some pockets of froth in the market that you ignore at your own risk, right?
Well, I think if you look, yes, there are pockets of froth, but we're seeing a very healthy broadening in this market.
Has it started because it started, then it didn't, and then it started again, and they got what we want, and we're seeing it?
Yes. Yeah, the conversation that we were having back in December was this is all about the Mag 7 and the hyperscalers. And then look what's happened this year. The Mag 7 is down and the market continues to move higher. Well, it's all about the tech sector. And then we saw disruption in the software space. And now we're seeing a big pullback in semiconductors. And yet through all of that, the market is near all-time highs because we are seeing a broadening. Earnings are continuing to deliver. A lot of that is tech, but you look at industrials, utilities, financials. This is a broader story, and that I think is really healthy.
Have we seen enough of the results this quarter to know there's not going to be major disappointment across the board?
Well, the early results look fantastic. Almost 90% of companies are beating expectations. And so I do think the results are going to come in strong. What we have to recognize, though, is because of what we've seen in markets, because of higher expectations, companies that do miss or don't beat by enough are likely to see a lot of downside. You have to be prepared to manage around that. And frankly, look for some opportunities because volatility can be your friend when you get a little bit of this volatility.
I don't know if anyone has ever thought about a break in the markets and actually identified before that break the cause of it. In hindsight, it always looks obvious what's going to cause it. What would be the causes this time, you think? Would it be inflation is too stubborn? Would it be that, and that causes the Fed to raise rates? Would it be that the AI capital spending somehow, that the money's not there or that it's pared back? What would do it this time?
I think there's the two top risks on our mind right now. Number one is that AI CapEx spend, because while we are seeing broadening, a lot of that broadening is related to the build out of these data centers. And if we were to start to see a meaningful pullback in that spend, I think that would have broader ramifications across the market. So that's one thing we're watching, but we don't see that happening. The other one would be a repeat of 2022, where rampant inflation would cause the Fed to have to tighten a lot more than markets are expected. So far, keep in mind, we went from, at the start of the year, markets expecting 3 cuts to markets now expecting 2 hikes. We disagree. We actually think the Fed's going to be on hold. And in that environment, earnings.
Well, that's big. If JP Morgan thinks that we're going to be on hold, that makes me feel a lot better. Maybe I'm not as crazy as some think I am. Maybe. That makes me even more bullish. I don't think that we can get in a situation where we start hiking, and I think JP Morgan's on the right path.
Continue to drive the story.
We've seen many technological revolutions in the past. And I guess that's a concern that something could peter out with AI, that the buildup could be too much. But at this point, I really don't think that's like the metaverse, for example. The metaverse came and went, I think, almost. This is not going to happen.
This feels very different. But the important thing is that the benefits of AI can't just, for this to work, they can't just accrue to a small group of hyperscalers. We need to see the positive impact of AI broadening out across not just the tech sector, but different sectors.
Do you need to see a payoff before they finish building everything out? Or will they just breakneck pace? To just whatever they need to do, they're going to keep doing it, and they'll find the money to do it, even if you're not seeing the return yet.
I think we are going to continue to see that spend.
That's what it looks regardless. Like, doesn't it?
Yeah, it does. But the positive thing, one of the things that we look at, we look at broad S&P profit margins, and they've gone higher. But when you look at a basket of stocks of companies that have really leaned into AI, and that's across different sectors, tech, financials, industrials, the profit margins in those companies are widening at an even faster pace. So we are actually seeing signs that AI investment is beginning to pay off. That's what these companies are going to need to see to be able to continue to build at this current pace and for investors to continue to fund that.
I mean, it's hard to think about what part of life the internet hasn't changed. Is it really possible that AI could be 2x, 10x what the internet is? And almost like electricity, some people have likened it to?
I mean, I think that AI has the potential to unlock, every part of the economy. Now, how you quantify that is really difficult to tell, but I think what's important is that you're seeing the broadening of the use cases across all different parts of the market. And we need to keep in mind, we think about AI as this thing that everybody is using because we talk about it all the time. The reality is it's still a very small portion of the population. So the potential runway on this AI opportunity, we think, is still long.
I guess what I'm worried about, if you add up the planned spending, and it's in the trillions, and I don't know where that money comes from, and if it's printed, then that just seems inflationary. But the story is that it's not inflationary; it's actually deflationary because of productivity, and I don't know if that comes quickly enough to prevent the money printing to basically create this new industry.
Yeah, well, I mean, we have seen a shift, right? A lot of the initial build out was funded through free cash flow from these companies, and then they've started to access debt markets and now equity markets. And so, that is something that's a risk that we need to keep an eye on, something that we spotlighted in our 2026 outlook. But I think when you look right now, that productivity question is going to be the key question. And right now we're seeing it in a more targeted way at companies that are investing. The ultimate question longer term is, will we see that productivity permeate to the economy at large? We think that probably takes a little bit more time.
You don't have a target. You don't concern yourself with things like that, do you, for the S&P?
We think that by the end of the year, our base case target is 7,800 and 8,200 for the middle of next year.
Okay. I like this guy. And I like this guy because I think he's correct. We need to see a broad rally of companies utilizing and attributing success to AI. Otherwise, we're always going to have the bears pointing fingers. And I think we're starting to see it with companies like Uber, companies like McDonald's, companies like JP Morgan, companies like Starbucks. I want to see how many more companies. Walmart will be an interesting one. I poke fun at Walmart all the time. But you know what? They're a great indication of a company that can certainly utilize AI to absolutely automate back office processes and reduce SG&A costs. So let's look at what's going on, and we will take a look at SaaS particularly. I know that I have my own ideas about SaaS. And look, I've been starting to say maybe I need to accept the fact that, you know what? Maybe I just need to accept the fact that SaaS is the new PayPal, even though I don't want to do it. Dude, let me see. Do all of you think SaaS is the next PayPal? Let's see in the chat. Yes, now going to the 60s. Holy shit. You know what? We're going to do a poll. Let me go in Let me get a poll going. SaaS is the new PayPal. I mean, unfortunately, it may be, right? I don't want it to be. But you know what? It may be. Oh my God. Don't say that I'm the last line of defense. You don't want me being the last line of defense. You want the Marines being the last line of defense. All right. Is SaaS the new PayPal? Or has it just been PayPal and I just overlooked it? I am your Sarah Connor. Oh boy. Oh boy, ladies and gentlemen. Oh boy. Listen. Such a great movie. And you know, I see all these things on X and on Instagram about why people are working out, and then it goes to the Terminator. At some point, we have to at least say that Skynet could be real at some point. Could it be real? Yeah, I think so. I don't want it to be. All right, you guys got a lot of people saying no. I like that. And if you guys could do me a favor, believe it or not, a lot of people that watch consistently are not subscribed to the channel. If you could please like and subscribe, I'd really appreciate it. Helps me a lot. Oh, Sarah Connor did not say you can't handle the truth, but we'll go with it, Evil Fandango. We'll go with it. All right, 67% are saying no. We'll roll with it. All right, let's take a look at what's going on in the market. Then let's look at cybersecurity. Let's try to find some deals on cybersecurity. Let's try to find some deals. So we got CoreWeave running. I'm happy because I'm doing quite well on my CoreWeave position. Okay. How many of you, let's say, did you buy the dip on Neo Clouds? Let's see. Did you guys buy the dip? Yes or no? I'm interested. All right, all right, all right. I like it, ladies and gentlemen. 60% yes. I mean, right now, it's turned out to be a good move. I mean, look, maybe we got to see. I don't know what it ends up doing going forward. I think these companies are undervalued, and we'll see. I particularly like CoreWeave here. I am a Nebius shareholder, but I really like CoreWeave. Yes, we're going to get to cyber after we look at the market. I promise you. Cybersecurity is coming up. I promise you. I'd have to look at my average price on CoreWeave. I own it in 3 accounts, I believe. I'd have to look. Probably mid to high 70s. That area, probably like 77-ish. Man, NVIDIA rocking out right now. 213.74. I'm with it. Like it. Oil, I don't like. I don't like this at all. Broadcom 395, I'm a little suspicious. But you know what? This can absolutely explode tomorrow to the upside. SanDisk is up. Ethereum 1954. I like that. Bitcoin is now green. Tesla's having a little bit of, not really a rough day. Yeah, I don't like seeing red into the print, though. Oracle just turned red. Amazon red. Oh, man. Man, we got to talk about Reddit and service now. But I promised I was going to do cybersecurity, so let's do it. So let's look and see if there's any deals from a PE perspective, and then we'll start looking at individual companies. Let's try see. So Bug is one of the big ETFs. So we're going to go off of the holdings in Bug. All right. So we got Palo Alto. I think that's PanW. We got Fortinet, CrowdStrike. When you got to throw Cisco in there. We got to throw Zscaler and Rubrik in there. Akami, Okta. So ZS. I'd even put Arista Networks in there, ANET. We'll throw RBRK in there. AKM, Akami, Okta. Any others you guys want in here? Let me know. I mean, not great. Man, cybersecurity is getting such a bid. 701. I'll allow it. What is that, S? Is S 701? Yeah. I'll allow it. I will allow it. What's RPD? Rapid 7. I don't know this company. It's a very small company. One looks exciting here. 105% EPS growth over the next 2 years, going from 53 times to 25 times. I would think that we missed the boat for the short term. I think long term, cybersecurity is good. But I mean, I feel like this trade is already so far into it. I don't know. 701 is probably, from a forward perspective, the most interesting. I have PanW in here. PanW is expensive. 70 times forward earnings. CrowdStrike, 93 times forward earnings. That's expensive. It's not about what company is a better company with a better product at this point. I'm looking at a trade that's exhausted. I'm looking at a trade that's exhausted. And look, I would want to own CrowdStrike if it came down a little bit more. That's definitely the leader. I mean, Rubrik's expected to grow a ton. But you know what? CrowdStrike is probably the one you really want to go with if you were going to do it, even though it's the most expensive. With AI attacks getting so involved, I would say the ones I would pick are Cisco, Arista Networks. Arista Networks actually doesn't look bad. Cisco doesn't look bad. Fortinet and CrowdStrike. Those would be the four that I want. Those would be the four that I want in my portfolio. But also, I'm not really that excited about this industry at the moment. I think it's really run hard. That's not a bad thing, but I think it has run hard. So let's take a look at ServiceNow. Has anything changed? Has the street changed predictions? Still trading at a very low multiple. So I think the question is, what is happening with SaaS? So let's take a look. Hold on a sec. Hold on a second. Hold on. Is there, I need to validate something. Give me one sec. China foreign minister prepared to collaborate with India to enhance cooperation in economics, trade, and other fields. I mean, that's actually big news. And we have another piece of big news. Senate Republicans, for all you that like crypto, released an updated Clarity Act draft incorporating new federal cryptic ethic restrictions alongside preserved developer shields, stablecoin yield limits, enhanced law enforcement tools, and customer bankruptcy protections. Whoa. The updated text advances a comprehensive crypto market framework, but grants exclusive civil enforcement authority to the DOJ. This is not going to pass. I doubt that passes. They're going to have some hard times ahead of them. I can tell you that. They're going to have some hard times. I don't know that passes. I was really hoping that the crypto trade would come back. And I do. There's a lot of people, a lot of people believe Clarity Act's bad for crypto. But at the same time, we need guardrails on crypto for a lot of people to feel okay about investing in it. That's the big problem. And I don't know what we're going to get. I just don't know. So we're going to end out this poll. Did you buy the Neo Clouds? 56% said yes. All right, so right now, here's what's going on with ServiceNow. Let's bring it up. Let's go over it. Let's get into SaaS. Today's a big day because ServiceNow, about to bring up the wrong screen, is reporting later. ServiceNow is reporting later. And it's ugly. And look, Chris is probably not awake. I texted him, he didn't answer. Chris was very bullish on this. We know that per his X post, Mr. Patel is exiting 75%. And let's bring it up. Chris Patel. Reduced 3/4 of my position and hedged the rest. As much as I believe in the company long term, taking some profits was the right move in not risking the SaaS apocalypse. IBM was one thing, but now with Pega, who is an enterprise player but much smaller, saying the same thing, IT budgets being directed towards cybersecurity instead of workflow optimization. If Now hit the same rough patch as everyone, is going to sell off. Still long but cautious. And what is causing this, Pega Systems is one of many things. Unprecedented changes in the AI market cause clients to delay their purchasing decisions. As a result, our ACV growth significantly slowed during the 6 months ended June 30th, 2026. Now, this is the second company to come out and say this. The first was IBM. Is ServiceNow the third? That's the question. Is ServiceNow the third? I happen to think ServiceNow is an incredible company, but there is a very big thing happening. Companies are focusing their budgets on cyber, and that's why we're seeing the valuations of cyber catch a huge bid. ServiceNow is down a ton. It trades at a great valuation, but the question is, are their earnings going to continue to compound? They should. The reality of the situation is that ServiceNow already has relationships with so many IT professionals, especially the decision makers, IT, infrastructure engineers, CTOs, CTIs. I mean, I think that we're going to see McDermott come out tonight and talk a big game. ServiceNow made some good security acquisitions. They're embedding them into their operating layer. When you have one system that's controlling everything, it streamlines processes. And it is a very accreditive aspect to their business. And Sammy's correct. It is impossible to predict software cash flows 3 to 5 years out. I got to tell you, I agree. Okay. Sammy, I agree with you. It's also impossible to predict the alphabet. Brandon, thank you for the gems. Really appreciate it. Whoa. Addicted to trading. Jason said Oracle is like Enron. No, he didn't. Did he really? We're going to hit him up right now. Where is Jason in my WhatsApp? Here we go. I am being told that you said Oracle is like Enron. Oh, boy. Oh, boy. This guy. Oh, man. Oracle, like Enron. Hold on. Oh, Jason J. What are we going to do with Jason? Now, here's the big thing about ServiceNow. Their current revenue is protected by contracts. The question is, can they upsell their current clients on their security projects? Maybe. Maybe they continue to compound earnings. Maybe they continue to drive more revenue. The problem is that Jason is now trolling me. Jason is now trolling me. Oh my God, this guy. ServiceNow. I don't know if I'm going to have time to go through the earnings report tonight. I'm going to try my best. I am very focused on Alphabet. I am very focused on Tesla. I have no intention. Is Jason not a mod? What are you talking about? What's he sending me? Oh, okay. So I get to watch it. All right. So let's see. Amit better not give me a ding here. I'm gonna watch with okay. LOL to Jason. He just sent this to me Let's see the joke together.
Did hit 74. So that one's still moving.
Who said to overlap Oracle with Enron's chart? What is that? Stop it.
Dude, if Oracle's Enron, we've got some bigger issues in this AI.
Yeah.
Broadcom.
Broadcom looks good. Yeah. So I think Broadcom's gonna be the same boat as Nvidia. So
Okay, so it was a joke. Oh, somebody asked him to overlay it. Oh, that's funny. No, it's not Enron. Oracle better not be Enron. If Oracle's Enron, oh my God. Yeah, I did not see that. I'm going to message him right now. Too funny. These guys are too funny. Too funny. Oh, man. All right. So let's talk about Oracle for a sec. What happens today? We get a very big earnings call. We just got out of Oracle's. Oracle's RPO grew. We're at 638 or something like that. We know OpenAI is 48% of it. But you know what? If Alphabet's RPO grows, oh, Jesus. Hold on. I think that they're about to make the case for CrowdStrike, and that was what you guys were telling me. So, yes, I'm with it. I like it. Let's take a look.
Faces systems. Joe, you own CrowdStrike. This is such a wild story. The fact that they were just testing these models, they leapfrogged out of the sandbox and intruded into the internal systems of Hugging Face, a company that, you know, most of us had never heard of.
Yeah, so let's take up the conversation of just kind of how do you think about where they are, all of the cybersecurity names relative to price and the recent highs. You're anticipating earnings in a couple of weeks. So I don't think you're going to see an aggressive nature in terms of adding to risk for positions that have been clear winners in the software space. Fundamentally, overall, nothing has changed surrounding the fact that you want to own cybersecurity in the software industry. CTOs are going to look universally at software and say, okay, for a lot of the SaaS programs over the last several years, we almost feel as though we've been ripped off on price based on now what the disruption is for AI. But as it relates to cybersecurity and price itself, we are going to pay that price because we are moving more and more into an environment where you need to have, as an enterprise, that's security. So it's benefiting CrowdStrike, it's benefiting Datadog, which is monitoring cloud infrastructure as well. Nothing is changing there. And Jenny mentioned Microsoft before, just touching on software. I actually see Microsoft having some relative outperformance in the month of July to the overall software industry itself. So if you are a Microsoft shareholder, as I am, maybe that's a signal that it's bottoming based on the nature of its force of its overwhelming.
Wouldn't that be nice if Microsoft is bottoming? Wouldn't that be nice? Oh, that would be music to my ears.
Balance sheet.
Liz, do you think that the cyber incumbents are the ones that are going to be best positioned to prevent these types of threats?
Yes, but I think cyber on a whole is just full of opportunity. I mean, if we've learned anything through this AI cycle, it's that security is paramount and everybody is so nervous about it from a business perspective, from a personal perspective. The demand for cybersecurity is only going to grow. Now, to Joe's point, they don't have to change their business models as much as SaaS companies likely have to change their business models. I don't think all of those die either, but cybersecurity likely has to grow up a little bit, has to keep up with the pace of how everything is innovating. But I mean, cyber just broadly, even the ETF, CIBR, buy.
Yeah, just one thing on this. I think from a bigger societal perspective, we should all be paying really close attention to this, and we should be very wary about this. If this could jump and connect to the internet when it wasn't connected, you're like, why wouldn't it be able to hack the cyber stocks too? I think we'll reflect back on this one day and say that was a warning shot, and we all should have been paying a lot more attention.
Well, I'll tell you, that's basically Skynet in a nutshell. That's basically Skynet in a nutshell. And those are good points. They're definitely good points. Now, let's get back. Still got to finish talking about super micro. So the margins are doubling. Preliminary Q4 numbers, GAAP and non-GAAP gross margins 15 to 17%. The guidance was 8.2 and 8.4. Oh, man. Skynet is the reason I'm nice to Claude. Do you say please and thank you to Claude? I actually do. I will actually go a step further and say to Claude, I really appreciate everything you're doing for me. It's actually, I'm with you. I'm trying to get on the good side of Claude. Hollis, if you're there, do you say please and thank you to your LLMs? I think that we should make it a thing. We should always say please and thank you to our LLMs. Oh, that's funny. All right. All right. Supermicro surging today. New orders in a single quarter. And I think that this is look at you guys. That's awesome. At least I'm not the only one. At least I'm not the only one. Chef Mike, they probably will. And here's the big thing for Supermicro that is important for the market today. The preliminary numbers indicated that their new orders topped 60 billion in a single quarter, taking the backlog to a record. And revenue is going to land near the low end of the guide. But the RPO, 60 billion plus. I mean, Supermicro does not get to 60 billion plus of orders. Dell does not expand its orders if people are not spending on chips. And I think that's just one more thing to show us that, you know what? The AI revolution is happening. It is absolutely going to disrupt a lot of things. You let out a barrage of curses. Oh boy. Oh boy. Gotta be nice to AI, man. You gotta be nice to AI. But I think this just validates what Alphabet's going to do. I think it really validates what Alphabet's going to do. I think Alphabet is going to come out like a knight in shining armor tonight, and I may have to make a new thumbnail about Sundar Pichai swinging the Excalibur. Because right now, it rests on him. It does. Now, let's get into Reddit and Google, okay? We got a data standoff, and Reddit is falling a tremendous amount today because the Wall Street Journal reported it may restrict Google's access to its content as the AI licensing deal expires. Now, the 2024 deal was worth roughly $60 million a year. And Reddit wants to change the new agreement to usage-based fees that scale as its content becomes more central to AI answers. Now, the core issue becomes traffic cannibalization. That's the big deal. And Pew data is showing users click through only 8% of the time when an AI summary appears. And I'll tell you this, I personally don't click through. If I'm just looking for something very quickly and I don't feel like bringing up Claude or OpenAI, and I did get a license to OpenAI, I'm going to play with it this week and I'm going to let you know if I like it or not. I got to tell you, if I'm just asking Gemini, I am good with the AI automated response a lot of times. So I see why Reddit wants to do this. Now, Reddit is falling right now. I got out of it. I was stopped, or I shouldn't say I was stopped out of my position, but my position was called away. And when you layer on all the covered calls I wrote, I did pretty good. It's still in my channel that I drew of higher lows. Depends where this breaks down. I should probably extend this line. I mean, pretty much screwed that up. But you know what? It's breaking through the line. Come on. Can we put it there? Okay, good. It's breaking through the line. The question is, does it bounce back or not? I don't know. Technicals with Steve. Technicals with Steve. Don't worry. I may have a surprise for you in a couple of minutes. Don't you worry. Don't you worry. But, oh, Lena's here. Look at Lena. Look at Lena. Palantir, baby. Palantir. Zoom out so we can see the picture. I mean, Reddit's a great, has done wonders for shareholders. Wonders. Oh, we haven't looked at SpaceX today. Where's good old SpaceX? And because of all of you, I am buying my nephew another share of SpaceX. Because of all of you. You guys told me last night to do it, so we're going to do it. Man, does that look ugly. SpaceX looks ugly. Oh. And I wanted to talk about this with everyone. To me, this is one of the biggest supply events in the market history. And you know what? We're weeks away from seeing what actually happens, because up to 911 million insider shares, which are worth around 116 billion, become sellable August 6th, 2 days after SpaceX's first earnings report. I mean, the schedule is going to stack up fast. You got 7% tranches that follow through the fall. Another 28% unlocks Q3 results. You got just a lot of things happening now. I don't know. You got to think about it like this. If you were an employee, is there a specific brokerage that I recommend? No. Listen, for a custodial account, you go with Fidelity, you go with Schwab, you go with Merrill. They're all good. They're all good. I think any of those companies, you could be fine. So I don't think that one is necessarily going to be better than the other. I think it's going to become, if you want to pay for Robinhood Gold, you'll get a good ROI on that if you're going to continuously invest in a retirement account for a child. You got to look at the deals. And now we got the man, the myth, the legend.
Oh, my goodness.
The man, the myth, the legend is here.
We are here.
Look at you with your soundboard.
What are you talking about?
I heard a little rumor.
I don't know what you're saying.
I heard a little rumor that you're coming into New York.
Oh, yes. I'm coming to New York. This is true.
So let's not spoil anything, but I heard a little rumor you're coming to New York. I'm just validating the rumor.
I mean, validated. I will. I hear someone banging at my door. I think it's my. Oh my god. Okay, buddy. You want to say hi? He says hello.
Hello.
What do you have? Bolts. Look at that's you. Yeah. All right.
I love it.
Very cool.
Get him into trading.
I mean, he's been in trading. He's like a halfway professional.
Better than me.
I mean, I don't know. You're doing pretty regular. You're doing the deal.
Jake Rizzo, I like it. Love
Future
it.
stock trader. You see, there's a little rocket back there that he left. He left a little rocket back there. I don't know if
Okay.
you can tell.
I can.
That's his signal. His stock pick yesterday was a rocket stock, and I was like, I don't know what to tell you.
Was it SpaceX?
No.
Which one was it?
It was the lava rockets. He likes that one.
Okay.
That's
How
his
you
pick.
feeling about SpaceX right now?
Oh, I haven't even looked. Honestly, we're so busy trying to get everything ready for New York, and I got a daughter on the way. Got to get her room ready. Holy crap! SpaceX.
Oh, congratulations.
Thank you.
That's awesome.
Yeah, SpaceX not looking hot.
And I was just going over the unlock schedule. Up to 911 million insider shares become sellable August 6th.
Yikes. I mean, Maddie's kind of crushing it with that, huh?
Yeah.
Definitely.
And then you got 7% tranches following in the fall.
That's right. There's still time. We have hope. It's going to be the biggest comeback ever.
I was in last place for 9 months last year.
9 months?
Yeah, I broke out at the end.
Holy crap.
So it can change on a dime.
Yeah, expect this. But I'm not looking for 9 months of the laggards here.
You know what?
That's
I was
true.
down for 9 months and then I came back.
Qualcomm. So we got big earnings tonight, right? So we got Google,
Huge.
we got Tesla. Qualcomm is basing out the lows. I'm definitely. I think that one's got some juice, at least into earnings right now. Whether or not they actually pull through, we'll see. But short interest went basically to zero on that one before earnings. After that investor event, which can you hear him? I have the.
Yeah, you're fine.
Ducking on. What's ducking? Ducking's probably good. Yeah, Nebius with a nice recovery here now, continuing. I mean, looking good. I think space is probably going to bottom in the next 3 months. So, I mean, I think Maddie actually timed that pretty well.
This is a good day. And I'll tell you why this is a good day.
No, it's a good day.
We're going to get a lot of validation. Supermicro, their RPO is the biggest it's ever been, over 60 billion. They don't get those orders if companies are not buying more chips.
100%. Yeah, I don't think Supermicro has never been. What's funny right now is like it's not even, the thesis. My thesis on SMCI for a while has been like it's the cheapest AI stock out there. Like deservedly so, I would say deservedly so. So with that caveat, because I mean, they've had their own issues. But just the same, they're booking orders. This new 16% margin or whatever it is, that's a little
margin double.
Yeah, unbelievable for sure. So I get that. How do you double over 1 quarter? That's insane. But any way you slice it, they're selling more gear. Like you said, they're decidedly selling more gear. And look, it's just bullish. The question isn't okay, but the question is more like, do the companies that are receiving the money or have those companies pulled forward too much? I think that's what's in question, which is a kind of crazy setup for this earnings season because there's just not a lot of room for error. I mean, we look at AMD. I haven't looked at it today. My gut is that she's still up there. Oh yeah, 555. This one's looking like $1 trillion company before they report. And I also, like we're saying, you know, that there's real expansion. Like these companies are really getting traction that they have not had for decades, right? AMD is like, this is a different kind of traction. And you can't really argue that when you put your ear to the street and you listen to what's happening in the market. Like, yeah, there's new projects happening with AMD, new partnerships, new build outs. It's real. Is it this real though? And how much have we pulled forward? I think is the real question that the market's asking at the same time.
We're going to find out tonight, because if Alphabet's RPO expands by 100 billion or so in 3 months,
yeah,
it's going to validate so many things. I mean, they're not tapping the debt market just to pad the balance sheet. They already have 130 billion in cash on hand between cash and short-term investments, which are in T-bills. So you got to think that they are buying more. You got to think Amazon's buying more. You got to think Microsoft and Meta are, Oracle is, and it's filtering down. I think the Neo Clouds were great investments last week. I bought a bunch of CoreWeave, and I think that Alphabet's going to prove it out this afternoon. And they're either going to validate the bear case, or they're going to come out swinging the Excalibur and put all the bears in their place.
Yeah, I don't think they're going to validate any bear case. Well, what could possibly be validation of the bear case? Like what in what world would that? What is that?
If they come out and say that they are slowing down their spend, which I don't see a way that they can do that. They're already pot committed to 190 billion this year, and they're expected to spend even more next year. So I'm just not in that camp.
Yeah, I mean, there's nothing the only thing I'm thinking of that could affect them or the industry poorly is like, I mean, it's not so much about Google as it is about how they affect the industry with what they say is their CapEx budget, right? And I think that the market, dude, you're very loud. There. The market's expecting like 30% something increase, which they may or may not do. We don't really know, right? And so if they don't increase their CapEx budget, that's probably bad price action in the near term. But also it likely gets bought, long term. So you're like, well, does it really matter? Yes, the School of Games was actually designed for this little man.
That's amazing.
Yeah, it was designed so that he and I could sit down next to each other and learn together.
That's amazing. I love that.
This is my only defense right now, which is like a little air blower. If he doesn't get out yet. If he tries to and actually, this is squirt gun. When he tries to come, I'm like,
Love that. Well, what are you looking at? Is there anything else you're looking at in this crazy market?
Yeah, I am. Sorry, he's really loud. Hey,
he's fine.
Go find your mother. Oh. Stay out. Okay.
And we got some new news. Intuitive Surgical and Medtronic are down. Johnson & Johnson just won an FDA nod for their surgical robot. For me, we are discounting the medical field so much. Surgeries are only going to get more advanced with AI and robotics. And I think that's just another use case that validates the AI trade.
I could not keep him out. He kept fighting back in.
Smart man. Smart man.
Sorry, dude.
No, it's all good. So what are you looking at?
There are a lot of from a trading perspective, investing perspective, it's kind of like I think there are a couple easy money trades right now. Broadcom, Nvidia usually do well, while the rest of the Mag 7 do well. While they report. Sorry, I think Intel reports next. AMD is typically a pairs trade against Intel, or like with Intel, because it's kind of like, well, if Intel does good, historically, before AI, it was always like, if Intel does good, it's good for AMD. If Intel does bad, it's good for AMD. So there's that. I'm very seriously looking at some setups into earnings in general. I like Akamai a lot, because they have that extra deal, that like $1.8 billion deal with Anthropic. That's really at this point not reflected in the price, I don't think. I think generally speaking, like the AI accelerators companies that are like with the businesses based around unit economics in terms of like usage, I think are going to be just the winners. And then some new things coming down the pipe where there's a lot of technology coming around, maneuvering around the memory bottleneck, if you will. I think memory stands as a function of AI for the foreseeable future, but I do think that human nature is going to find a way to work around that at some point, and I think that is probably the most near-term trade. And for me, a lot of that is like if you go into different markets, like Global Foundries is very much a part of that to me, and some of those other things, ancillary AI accelerant type trades, I think, around the edge and power economics. I like power. I've always liked power, and some of these things have come down quite a bit.
How do you feel about Netflix here? This is the chart.
Yeah, I think Netflix is the chart is seared into my brain. The chart, here, I'll pull it up. You want to see what a real trader's chart looks like?
I want to see what a real trader's chart looks like.
Okay. The boy's out. Let me close the door and I'll be able to focus.
All right. Ladies and gentlemen, we're about to go to the School of Paper Games. We're about to go to school right now.
Boom. Should be sharing right about now. This is a rocket. That was the sound effects. It's a toy rocket. All right, Netflix. Let's go. Couple things here. This old chart would get you cleaned up. So this little bounce was great, but the biggest thing on Netflix, if you measure like technical retracements and things like that, you usually want to go from an extreme low to an extreme high. In this instance, this is extreme low. I mean, it's pretty clear. This is a daily chart. Most people might not see it like this, but this is how I see it. There's a basic retracement is what we would say 50% of that space, and that is let's call it percents. So that is 50% measured from what we call swing high to swing low. I'm gonna make this a little bit bigger so you can see it. Here, I think you can see that. That's about as high as I can go. So measuring from extreme low to extreme high, about 50% is about that $75 mark, which initially is where this kind of bounced. This entire range here between 75 down to what we would call $61.52. This is 61.8%. At that point, that's when you have a technical edge. So it's just slightly over a 50% retracement of any existing move. So in this area, we call this like they call it the golden zone, if you will, between 50 and 61.8%. I think there's a very high probability that you see low 60s right now from a technical perspective, and that's going to give you a pretty solid edge in terms of if you're looking for an entry point from a long-term position trading perspective. So anything as close to 60, I would say, as you can is probably good. If it's below that, though, that's when this is, I wouldn't say broken, but that's when any upside bounce is really decidedly not happening, and when you know your trade is done. So I think what this looks like is a trade that would likely go something like this, board perspective. But once you're in a trade, you kind of need to have upside targets also, which in this instance, let's say if $60 is the low, let's say conversely we measure from this extreme high to call it this extreme low, roughly. You're going to need to get through a couple different spots, and this quickly creates what we call a trade plan, where you have one target, two targets, and ultimately a third target. This is not even actually trying to get all the way up, but imagine for a second that you did get a trade like this and you're not even going for all-time highs. That's like 70% upside. That's pretty, for a very tight risk to reward. That's a great trade. Actually, you can make a lot of money trading something like that. So there are setups across the board that are very much like this. I think that Netflix is still on the investment phase, so expecting this to happen anytime soon. I don't know that. I don't. It'll probably be a while before Netflix actually breaks out of this. So it might do something like this before you can kind of like round out and actually make a big move. But in this area, I think from a long-term accumulation perspective, is probably fine. So I'd say go for it here now. That's without using any like traditional indicators. If I move on to like simple moving averages and things like that, what I will say is like, yeah, it's fairly thin up here, but there's a purple line down here that we use called the 200-week simple moving average. This guy right here. If I take everything else off, what becomes kind of more interesting from a long-term perspective is that whenever this is actually come below its 200-week simple moving average, you can see, well, actually, there's only been that one time. There's only been this one time in Netflix's 2 times general history where actually has traded below its 200-week average. So one back in 2011 when it goes from $4 to 90 cents. That's an 80%. So it's had two, did you know this? 2 80% corrections in its history. One, two, it's about 75. Not saying that this is it or this is another one, but anything under a 200-week simple moving average is usually good across the board as a general broad statement for anything. And if this does lose that $60 level, 57, 80% is actually about here, which would be wild. I don't think that's actually going to happen, but yeah.
So let me ask you this. We got huge earnings. Can you look at Tesla and Alphabet and let us know what you think? Are there charts indicating anything that is suspicious at all?
No, so the charts are decidedly neutral. What I would do is there's only one thing to do with earnings, because I'll tell you what, the guessing game on directional moves for earnings is decidedly gambling, and I do not do that. You can have a stock. Well, I try not to do that. I mean, from an investing perspective, you will have to. But so for Tesla, just quickly, this is just going to say, hey, look, their expected move looks about 5.2%. They pull up an option chain. Let me I think I can actually share a real brokerage. You guys, I mean, do you use real brokerages, or what are we doing here?
If you're going to pull up an option chain, you just go to Seeking Alpha.
No, absolutely not. Hell no. Why would that even be an option? Is your option chain going to look even remotely like this on Seeking Alpha?
That's too bulky.
No, dude, this is what you need.
Okay.
I'm making adjustments for you. I think they can see this. So this is this week's, but just as an aside, so this is Tesla. How do you actually find out what Tesla looks like or what the implied move is? You add the at the money put plus the at the money call together. So it's trading roughly 377. So actually 377.50 is near exact. So that's about a $20, $22, $21.50 move. So 1060 plus 1070. 5%. I'm going to have to open up a chain here, but I will pull this up. So this is saying that the implied move is $10 lower. I actually think this is wrong. $20 in either direction. So 54. They're saying downside is here on Tesla. I would actually say, okay, this is probably more accurate. We have a little session gap. And upside is $20 implied move. Yeah, this is nothing. So there's really no implied move on Tesla.
Which is kind of crazy because Tesla's so volatile.
Not on earnings. So historically, Tesla doesn't move on earnings, quite frankly. So because Tesla actually updates their company metrics all the time, like monthly delivery numbers and things like that. If you were to look at, okay, so here's the last earnings candle. It's literally here. Actually, look, Tesla prior moves, 3.6%, 3.5, 2.1, 8.2 is the last one. That's July 23rd. And I don't even think that that's June of last year, 2025. Holy crap. This was the last earnings move here, which is 8.5%. But even then, look at it. Like it's just this little gap right here that ended up recovering anyways. So yeah, Tesla, you have to go back to October 2024 where it started having actual bigger moves, which is a long time ago. Here, that's one earnings move right there. And then here, an earnings move. And here, an earnings move. And here. So this is the last era where Tesla had actually like big earnings moves. But in relation to the stock itself, like it's almost like it's almost like you don't even notice it. So yeah, it's not, I don't think it's going to be a big thing one way or the other, but this is the last era, 2023 through the end of 2024, where Tesla was moving a lot. But even then, these are not like in the grand scheme, it's not that much. So yeah, I think that's fine. Like if Tesla drops down 330s, I think it probably ends up getting bought. Maybe it goes slightly lower. And if it goes up, honestly, I think Tesla sets up best here for selling upside covered calls, not necessarily downside puts, unless you want to sell like $300 puts. But Tesla here, there's a lot of overhead resistance, technically, right up here. So anybody that, assuming, let's say the stock goes up 10, 20%, like the option chain is implying, it's going to land like literally right here. You look left and there's just so much, potential selling that's going to hit that. I just don't think it can. I don't see it happening. And also downside. So like if the downside happens and it actually does come down like this, there's a decently equivalent amount of buying that's happened in this general area too. So I would say probably gets bought up. I think Google's actually very similar too. So I hate to be like boring. Like this is all your support right here. Google's 400 upside, 300 downside. I mean, is it really going to make a difference one way or the other for the technicals? It's actually not. And so when I'm in those situations, I get another 5% move implied. When I'm in those situations, it's not usually something that I want to take a directional bet on. So this guy, it's currently trading at 348 here. Call it $15 implied move for Google, which gives it, yeah, either right back to where it was just the other day or right down to where it was the other day. Yeah, I just don't see it. So it's either coming down here or it's coming up to right about here. We'll call this resistance. We'll call this support. And in this instance, yeah, same thing. Like if it goes down, it's closer to this area. That's around the 200-day simple. I would assume that people start to buy somewhere in this general area. And again, kind of boring setup. If it goes up, you're at resistance. It's probably safer to say that there's more selling potential up here than not. So I think that this earnings season sets up amazingly for the mags, for the big ones, for premium sellers. The easy money right here, right now. Look, NVIDIA, how's this chart? This chart looks totally different. This one looks good. I think here, taking everything else off, no indicators, no nothing. If I just like draw a couple shapes again, we have a pretty heavy, call it consolidation. We call this a break. Comes back in, retests. Then you have a reaction here, all of this area, and you have yet another reaction right here. This is textbook break. We call this a base, retest, and then react. This sets up for new highs. Just super simple, right? Same thing, break, come back, retest. You can react in this general area. Look, I'm not using any indicators. Should and is right now currently acting as a level of support. So even if NVIDIA were to come down, I don't see much to any downside on NVIDIA here as the Mag 7 report. And here's another one super similar. But we're looking for basically NVIDIA to come out of a similar situation like this. Broadcom's chart is, sorry, I'm doing the flow state thing, I guess, is even at a nicer level, where if you look at this kind of general consolidation, what's happening right here, break on earnings, pull back, right? Base, and now we react. This is exactly technical analysis 101 with no indicators. I don't use indicators like that. I don't think you should. This is what we call price action. It's raw price action, and it is everything. But yeah, this is how in the intraday, like day-to-day noise, this is a very noisy chart, right? But when you zoom out and you look at something like this and you know, hey, look, I have a catalyst coming, this becomes the easiest money in the market right now. This looks pretty solid to me. It's kind of like, look, why is this happening? This is a bet on Google increasing CapEx, not just Google, Tesla, or XAI rather, Google, Meta, Microsoft. That's what these charts are literally saying right now. So the one thing that's the cautionary note here is like, well, okay, so if those companies do not increase their CapEx, then it's like, well, okay, probably this trade here stalls, but it's still not going to go reverse. Like, let's say stalls meaning like it comes back in and it retests, and then that would be a huge dump. That's like, I'm talking a $20 drop on Broadcom. But look at that for a second. Does that break the chart at all? No, it doesn't. Like, Gibby, bring it. Like, go ahead, come to Papa so I can buy it, because it's not breaking. Not here, not now.
Interesting. Well, there is a company that everybody wants you to do, if you wouldn't mind. Oracle. They
Oh,
want
yeah.
to see it. They want to see it.
I have a question. So it's about 10:40 a.m. here.
Yeah.
I have a real decision to make.
Oh, let's go. Let's get after it.
So it's either Starbucks Nitro cold brew with vanilla sweet cream in a can.
Fire.
This might be a little jittery. Or this is the trading drink if I need to be focused. This is a matcha green tea latte. So matcha has the caffeine, but it's not the jittery. It's more concentrate.
Well, what are you trying to do with your day? That's the question.
I think I need a little juice here. Yeah. I think I need the energy.
All right. So get after it. Starbucks, baby. I'm with you.
We're going Starbucks first. Is that this chart?
I got mine right here.
Let's go. Yeah, this chart don't look great, but it's not. It looks fine, actually. Oh. Do I have to take it all back? Is Starbucks setting up for like a multi-year breakout?
Starbucks is very exciting. They canceled their contracts with IBM and Microsoft. That's about $400 million a year. They're building their own software. They got a lot of things going for them.
This is a massive consolidation, dude.
Yeah. I'm a shareholder. I'm a fan.
He's a fan. I don't hate this at all. This is just like steady staircase up, but over. It could probably make you very impatient. Yeah, this is not bad. You're right at resistance though. So if this gets over, oh man, this looks like a couple years down the road, not one. I'm literally saying a couple. This is like 160. So like 50% in 2 years, probably, maybe potentially more. As long as this is holding around 100. Once this finally breaks, this is going to be good. All right. So you wanted the Oracle?
Please. Addicted to for trading.
Help me understand. Do you want my fundamental take on this, or do you want like the technicals?
I want both. Well, give me the technicals because I can break down the fundamental pretty simply.
Okay, so you can break down the so I can do the qualitative fundamentals, you can do the quantitative fundamentals. Yes. How's that? There is a slight difference here. Technically speaking, you're actually like okay. You're entering an area of interest which spans this entire, so it spans this 2020. Basically, think about it this way. The last time this stock was trading at this price was in 2023 to 2024. And then after 2024, there was a massive breakout. So whatever, and this was not AI, whatever this breakout was for is no longer priced into the stock. That's probably valid, if, like based on everything that's going on. That's probably valid, and I think you'd be okay with that. That said, does whatever was going, the question is, whatever was holding the stock up in 2024, is that still valid today? That's the question here. And then any additional nuance of new business units or new, I don't want to say revenue, but EPS, earnings potential is what would be new to the stock. So from that perspective, I would say that this is near support, but this support is an entire range, and it goes down to 106, and it's this essential area here. If Oracle comes in like this, I would actually expect that. So this is a critical point. You can see it on the chart. It was a critical point here, 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 here. This was what we would call like resistance in this area. That's probably a little bit too small. So resistance over here. And then it becomes support here. And now it's slightly over it one more time, or slightly below it. So the question here is above that same exact level, which is 125.70 127.54. Is this now resistance in the future? Or can the price actually get up over it and turn that into support? As it sits right here, this very moment, the answer is resistance. So if the answer stays resistance, meaning if it continues down lower, let's call it below 120s, then I would expect the $100 level or possibly a little bit lower. And so where Oracle is a wait and see moment. Look at Broadcom go. And the best case scenario is that as you approach earnings, you start to get full daily candles that close over that 127 and change area, and then you get in a little extension like this. So that's what your candles would actually look like, ideally. What you don't want, this is going to be like a neutral candle, so I'll call this kind of orange, even if it's like that. But what you don't want is you don't want this extension lower here, because that does decidedly set this up. So you have option 1 and option 2. And yes, I'm literally saying it could go up or it could go down, but that is in fact how trading works. It's if this, then that. If you were short, this is the good news is if you were short from up here, this is the time where someone who is short should cover their short and essentially they go long. But that's what you're waiting for. You're waiting for the next move. In the meantime, maybe it goes sideways for a little bit, which is exactly what's happening. And then eventually, maybe you get a little bit of a pop. That pop, though, you got to keep in mind, there's still a lot of resistance over here. What's the short interest on Oracle? I would check that.
I'm sorry, right now, short interest on Oracle.
The trend of the short interest is what I want to know. Is the short interest going up or going down?
It's 1.46%. It doesn't even matter.
No. So the trend of the short interest, was it higher or was it lower?
That I don't know what the trend is. Let me go to Market Watch.
So when I'm looking at short interest, and I don't that often, all I want to know is, are they getting shorter or are they covering?
Let's.
And I don't actually know who said overlay and run charts on top of Oracle, but
Addicted to trading. I can't tell.
You can't
tell? Market Beat doesn't have I thought they had something for short interest. Hold on, short interest. Oh, here we go. It's getting more short.
There you go. So that's your answer. Interesting, huh?
Yeah, but I mean, I would expect that with the debt load and what's happening with that.
I actually don't think it's getting more short. I'm looking at over. Well, I don't know.
I mean,
a couple days. It's yeah.
I mean,
we'll see.
I mean, compared to where it was in 2024 and 2025, it's trending up.
Yeah, that's true. I think, the question I have, like, qualitatively is, okay, so they have a lot of data center builds set up to go live.
Yeah.
We know that data center builds in general are getting stalled across the board because interconnect between the grid and the actual data centers are having a hard time. So the timeline is getting significantly pushed out. I believe they've already delayed a couple. So you'd have to really dive into that specifically. That said, is it not going to happen? No, I don't think that there's a shot that it doesn't happen. I think specifically for Oracle, the question then becomes, okay, can they actually expand beyond OpenAI? And in addition to that, does OpenAI continue to expand their contract with Oracle? And I think right now, the question actually is no, they don't, or the answer is actually no, they don't, because that's in fact, we're not seeing that at all. The footprint that Oracle's been able to secure from a financing perspective is pretty much maxed, I believe, I guess. I think the market believes, and it's being stalled. In the meantime, OpenAI still, regardless of Oracle, needs to get this compute. I don't think that changes whatsoever. And so then they go talk to who? Meta. They go talk to whoever, but it's whoever is the next person involved. So Oracle's essential cloud, neo cloud pivot becomes another Iran or Cypher, or you name your neo cloud. Exactly what it is. So it's taking a legacy database, legacy software business that, how old's the CEO, Larry? It's like 80 years old.
78 to 82, Trump's age.
So a 78-year-old CEO taking a 50-year-old something company, not so different than IPM, and who's sticky, but trying to shift it in its entirety to repurpose some data center footprints and expand into a neo cloud. And I think that is the confusing piece. It's also the interesting piece. It's all of the above, but it's the now execution part that is in question. So it's not whether I don't even believe it's whether or not Oracle itself makes money. I don't think that's should be in question. It's whether, okay, so that is currently in the stock. Maybe they don't go bankrupt, so they save themselves. But from here, looking even more forward, the question is not, the answer is not as clear. Can they continue to expand? Does OpenAI expand? Do they get other contracts with other people? Can they do a deal with AMD or NVIDIA? Who knows, right? Or with Microsoft or with Amazon? I think that's what the market would want to know. Do they have any custom silicon? No. I mean, at that point, there's not anything really making them more unique over an Iran, or definitely not more unique than a Nebius or a CoreWeave to me. So that's the qualitative perspective. But I think, to your point, where you probably would go is that there's still additional value, I guess, on the underlying company. And I think that's what I can't really quantify from that perspective.
Yeah. So here's how, from a fundamental place I look at. First, the new news. You have them facing a $7 billion collateral bill for the Wisconsin data center. And then you have the New Mexico denying their gas pipeline permit.
Yeah.
Look, they're both going to cost time and money. Problem is, at this point, the $7 billion collateral bill for Oracle could be $100 million a year in interest if they have to carry a letter of credit for that. So the question becomes, okay, what do the actual fundamentals of Oracle look like? And if we look at where they are, I think that they're at an inflection point. And it's something that I think can go under 100 because of how hated it is. But when I look at a TTM basis of revenue and I look at the trends going in the right direction. I mean, if we go back, this was a company that was basically really flat heading into 2023 for a long time. And now they're starting to scale at a quicker pace than they ever have. If we look at their cash flow statement, we look at operating cash. That's a huge increase on a TTM basis. I mean, it's jumping off the charts. They've never had a move like that, except for when they decreased from such a strong amount. That's an inflection point.
I have a question. Is that a prepayment?
Is that a one-time?
Yeah, I think the question is because is that a one-time like jump on the balance sheet via like OpenAI prepayment?
So I don't believe it is. Now,
that's what the analysts would discount, right?
Right.
And that's why that would make sense.
And I'd have to look if it's actually prepayment. What I would say, the big jump is because they allocated in 2025 $21.2 billion in CapEx, and they never allocated more than $9 billion prior to that. So what they're putting in service has a lag, and you're seeing it catch up in the following year. So I think that when you look at on an annualized basis, because they just closed out their fiscal year, they are putting into service, and there's a 6 to 9 month lag of when it comes online and they start generating cash from operations, that the cash from operations is going to expand tremendously going forward. And I think that they're going to spend more money this upcoming year in 27 fiscal year. And this is the inflection point, because when you look at how much is going into this on a year over year basis, I mean, the operating cash increased 53.6%. So the question is, are they going to go bankrupt spending this? Well, I don't believe so. I believe they have more than enough EBITDA to pay for this. When you look at the interest expenses versus EBITDA, not really worried about it, because EBITDA is scaling a tremendous amount. So yes, 4.6 billion sucks. That's probably going to go to 5.5 billion. But as EBITDA scales, I wouldn't worry about it. And when you think about their earnings potential from this and their revenue potential, it is somewhere where, if you believe the AI revolution is real, this could be the best bang for the buck. Because if you go by the street's estimate,
better than SMCI.
Well,
if we're dumpster diving, wait.
No. Think about this. If you go by the actual street, because I'm not going to create my own earnings estimates because people will say I'm cherry picking. But if you look at the 5 hyperscalers,
is that how the real world works?
I'm not trying to cherry pick. I'm going by what the street estimates are. Oracle trades at 8 times forward earnings. And over the next 2 years, from the end of this fiscal year to the next 2 years, they are trading at a number with 90% EPS growth over the next 2 years.
Okay, but hold on. So they still have how much debt? It's over $100 billion.
128 billion.
Now it's 128. So dude, I found a tweet that I made like a long time ago. December. Can you pull that up and share it?
Yes, I can.
I just DM'd you.
I know.
I saw it. Qualitatively, this is the same thing. At the time of the post that I just found, Oracle was like 200. Or I can do it either way. You got it. Yeah, it's funny, right? So 110 billion debt, but so are they still going free cash flow negative?
Yes, probably for 2 years.
Yeah, and I think this is it, right?
From a short-term perspective, this can go under 100. From a long-term perspective, Oracle may be the best buy in the group. I mean, so
long term? Yeah, to your point, long term, and you have to be able to. So what you have to do is you have to have the vision of like, okay, is this going to turn around, and then when is that inflection point? And I think that part that you're talking about is even more qualitative, because like when the executives of the companies start to hint at like not being free cash flow negative or like being able to turn around, it's not going to be on the balance sheet, right? Once it's actually there, once they're no longer cash flow negative, then there's no more asymmetric upside trade. Your trade is over and it's complete, because then the Wall Street analysts can model it. And the gap between before it gets there and when it gets there, that's your fundamental trade. Right?
This is when you want to, my opinion, take a chance if you're going to take a chance, because the market hates it. It's in a big downtrend. They're spending a tremendous amount of money, but we're seeing the results that they are monetizing the CapEx they're spending. We're seeing it with other companies because they're monetizing. And you got to think about like an AT&T. AT&T is now looking to increase the repurchases by 25%, targeting 18 billion free cash flow. AT&T is still saddled with debt. Verizon is saddled with over 100 billion of debt. As long as you can service the debt, it's not a big deal.
Right. It's and long term, I think stock prices generally follow
earnings,
not revenue, but earnings. And so servicing the debt is not good enough. It's when, and that's why I like Rivian too. It's like, no, they're not, they're still losing money on every car, but it's like, I need it's like hunting for asymmetric upside on a clock, right? Like, do I have a clock here? Can I quantify the timeline of and what needs to happen so I can track are they on track to actually become cash flow positive before, to your point, before they are cash flow positive?
Look at how much their revenue expansion is supposed to be the next 3 years. And this is from 42 analysts for this year, 40 for next year, and 22 from the following year. They're expected to do 89 billion of revenue this year, 130 next year, 181.
But what I think you're saying is that all of this is already in the stock. What you need to have as an investor, and what I hear you saying is that you need to be able to foresee like when this is actually going to be even better and have a timeline around that. Like,
no, I don't think it's in the stock. I don't think this is in the stock. I think the market doesn't believe this is going to happen, because if you look at the earnings, they're trading at 16 times this year's earnings, and the street is expecting them to do 35% earnings growth next year and 44% the next year, trading at 8 times forward. I don't think this is in the stock. I think the market is calling bullshit that this isn't going to happen. And that's why it's trading at such a low valuation, because they're looking at the debt, they're looking at the interest expenses, and they're worried about OpenAI going force majeure on data centers. And because 48% of their RPO is OpenAI, I think the market is really calling BS on Oracle, and that's why there's such an opportunity if you're a 3 to 5 year investor.
Or further, right? 5 to 10. I think from that perspective, you take these kind of shots. But I think also, to your point, with the caveat that it's worth the shot, but knowing that you're not going to catch the bottom or call the bottom, and that, all you can really say is like estimate is that it's probably closer to the bottom than it is the top. So for that reason, and with that logic, I'll take a little risk. And I do the same thing with Qualcomm right here, right now. It's like, it's probably closer to the bottom than the top, even ahead of earnings, even though I don't know that anything meaningful is going to show up on earnings. I think it's just going to be like what they say. And there's a possibility that something shows up on earnings that eventually the analyst might be able to model and therefore price into the stock. But yeah, it's a decent thing, a decent spot. I think, even if I just took Qualcomm as an example and compared to Oracle, and the one thing, they're both falling since they're like, Qualcomm's been a sell the news since the investor day. Technically it's like right on edge. So from here, the difference for me is that I'm going to quickly know whether or not I'm wrong on Qualcomm, like very quickly. And I have a solid understanding of where it can go to the downside. I think you could say something somewhat similar, with the difference on Oracle being, okay, well, I would have wanted to say that probably here because it had gone sideways for a while. At this point, I don't have that sideways action. I have this area on the chart to reference, which is 2 years ago. So what I can say is, if it bottoms in here, cool. The second it goes up, I want to see it. I actually want to see it get above this area, 140 in the future. Because in the meantime, I don't necessarily want to be buying it over 140, because at that point I could get slapped. So if you're talking accumulation range, I would almost go out on a limb and say only below 130 would I be willing to somewhat accumulate Oracle very slowly, and the lower that it goes, have at it. But knowing that, maybe you're just completely wrong, right? And maybe earnings comes and it just dumps on you. But that is the risk. That is the market. And as you say, there's no crying in the casino. That's how it goes. You gotta, no risk, no Rari. That's what risk it, biscuit.
Oracle could absolutely go under 100, and I'm prepared for that, because this is something where I'm ready to hold this for 5 years. Easy.
Yeah, no, I mean, I think that's the thing. Like, if you're gonna actually invest in a stock, like legitimately buy a company as an investment for 3 to 5 years, if you're not prepared, or like, I would even say this, if you're not expecting it to take like an immediate 40% haircut, you shouldn't be buying the stock, right? Then you're gonna get all worried about it. Like, expect it and be cool with that. And like, you know, if it doesn't happen, great. But when you're investing, like truly investing, nah, it's got to be like that.
I agree 100%. I agree 100% on that. So I'm in it. I've been buying it. I've been buying CoreWeave also. CoreWeave, I think, is just.
Well, CoreWeave, we know is technical, like beautiful spot when you got if you got it.
Buy on the. For me, it's the easiest buy the NeoClouds right now.
Why CoreWeave over Nebius?
I'll show you why.
Show me. And Fandango, evil. It's actually the same way with trading. Quite frankly, it is exactly the same. So if I take a trade, which is where they do overlap. If I take a trade and I'm not expecting it to go down like 40%, you know, what am I doing? You know, from a near-term perspective, with a leverage vehicle, I probably shouldn't be taking the trade, but hopefully it doesn't. And that, at least if you do things that way in the stock market, I'll just say that's one piece of advice. Steve violently agreeing with me here is that when shit hits the fan, when stuff goes really bad, it's usually for one real reason, and that is that you size too big. It's all about size. It's all about your position size. Why do you oversize? Because you're overconfident. Like you're so sold on your thesis, or you're so sold on you being right. And whenever that happens, or you're coming off a really hot streak, whenever that happens, almost every time for me, I know that I'm in trouble because I can put too much at risk at any given time. And when I put too much at risk at any given time, I start to freak out. I cut my losses. I cut losers like too early, and they become winners later on. I cut my winners too quickly because I'm unsure, and it just feeds like this vicious cycle. So that thing that I said about your position sizing, that is in fact everything when it comes to trading and investing to me. So like, there you have it. The nugget.
Yeah. And look, I know Nebius is scaling. I am a Nebius shareholder. CoreWeave is scaling at an unbelievable rate. They went from 1.6 to 2.1 billion dollars in revenue quarter over quarter. And they have 99 billion in RPO. Contracts are take or pay. I don't know if Nebius's are. I don't believe they are. But when I look at CoreWeave's revenue,
most of Nebius is prepay.
Yeah, it's not take or pay, which I like take or pay contracts. The EBITDA is also scaling quarter over quarter in Q2 to Q3. Went up by about 100 million, 110 million. Following quarter over quarter, Q3 to Q4, 70 million. But Q4 to Q5, $270 million. $1 billion in 3 months now of EBITDA. And this company, the big scare is the debt load. Their RPO book is growing past 99 billion. I think that tonight we get validation from Oracle on a lot of things. And I think CoreWeave has the potential to do really large numbers of appreciation over the next couple of weeks.
So there's your so you think, hold on. So are you saying that Oracle is a pairs trade against Google?
What I am saying
is that what I hear you saying? Is this your
I'm saying
right
now? Tonight, if Alphabet comes out and they say our RPO last quarter grew 99% to 460 billion. This quarter, it grew anywhere past 560, and they add another 100 billion on after doubling quarter over quarter. And I'm trying to be conservative because they could grow up by 50%. They validate how much more demand there is than people actually estimated. And it sets the stage for next week with Amazon, Microsoft coming out and saying the same thing and showing the same numbers. And then the bear case gets eradicated, because if we thought we were topped out before and all three of them expand the RPO book, it just shows us how much more money is being spent. You look at Supermicro, you look at the results, you look at the deals with Micron, you look at the deals with NVIDIA and Broadcom. I think the hardware layer keeps expanding. The NeoCloud and the hyperscalers keep expanding. And eventually, the CapEx that's spent will translate into larger cash from operations. And there's going to be a lot of free cash flow over the next 3 to 5 years. Nice applause there.
We'll take it. We'll take it. No, I like it. It's worth a watch for sure. I'm super interested. Even it's not even just Google, right? Like Google's the first one, and I think this is exactly what we're seeing in the market. And it's starting with Broadcom and NVIDIA. And if those two, and if that follows through, I think to your point, yeah, right now Broadcom and NVIDIA are decidedly consensus in the market today. If it's right, then the rest of the entire cohort follows suit.
Yeah. And look, long term,
like
the picks and shovels are going to do well.
That's what I'm just saying, don't count your brother out.
No, I'm just saying, like, over the long term, the picks and shovels will do well. This could be a situation, CapEx grows for the next several years, then goes into maintenance mode. But maintenance mode does not need to be CapEx is declining. And when you think about how these companies spend money, we could get into a situation where there's $1 trillion spent, and then the next year there's 1.1 trillion spent. And the bear case would be, well, the CapEx growth is slowing. It's called, yeah, no shit, it's slowing. But they just added $100 billion of spend. Who do you think benefits that there? Then you have a situation where there's a lot of companies making a lot of money. The hyperscalers go into maintenance mode and just kind of stay there. And then their CapEx levels off and the cash from operations explodes and we get free cash flow positive again. If we're going to say they're going negative next year. And look, this is going to be a couple of years to play out. This isn't going to be a 1 day or a 1 quarter cycle. Like, we need 3 years for this entire thesis to play out. But I do think the market's wrong that all of a sudden in 3 years, we're just going to stop spending on memory and CPUs and GPUs. I don't believe it. There's never been a time in history where we just stopped innovating and spending on hardware. It's never happened. We don't have humanoid robots. We don't have full self-driving. We don't have anything.
The only question is whether or not they actually make money off of it, right? Because I don't think it's even, I don't think it's a relevant comparison, but like the one other, it's not even, the magnitude is just so different, but just for comparison's sake, 5G was going to be the next big thing, right? And it in fact was from a technology perspective, but the companies involved in the 5G build out and all that kind of stuff did not actually make any real money. And the trade, if you will, was a dud, like fell flat on his face. But the technology and I think this right here is the argument from the bears. The technology was transformative, but people, because it was such a commodity, people did not, the companies weren't able to really make money. Are LLMs a commodity? Yeah, for sure. But is AI in general no, I don't know about that. And this technology that we're talking about is so much more transformative than 5G ever was or ever could have been.
So much more.
I'm just like, it's not really the same scale. But that I think is the bears argument right now.
We're gonna find out tonight what actually happens. And we got IBM tonight. We got ServiceNow. It's not just
IBM's going to be bad.
Well, we know that.
Right. But like they get hammered twice on the same thing all the time. Stocks do.
That creates a buying opportunity, especially when you're getting paid with a dividend.
Unless you're IBM. No, not for IBM. I will never change on that one, but that's all good.
Oh no, the dividend yields back to 3%. If you tell me if this goes back to 125,
it goes to like 50. So like, dude, it's no.
If
That
this
dividend
goes
is not
back,
going to last. That dividend's going to go away, my dude.
no, it's not.
It is, dude. They're not going to have money to pay you that dividend forever. Not if things keep going the way that they are. Do you know that IBM sells servers, storage, networking, has a massive security arm?
I'm aware of the business.
So you're aware this is the biggest whiff in like our time, like in our like in 100 years of businesses. Like this is like what?
They diversified away from a lot of their mainframe. They still have some.
They diversified away from everything that they should have gone towards also, though. Their Power Edge servers, their Scale AI, like storage footprint. QRadar was their biggest security product out there. They sold it for a loss. They've been talking about like quantum for how many decades? Sold part of
at least a decade.
Sold part of Watson for a loss. Really not. Kudos to the current CEO who did change the balance sheet dynamics quite a bit by offing a dying part of the business. But the whole reason he's a lifer, promoted by a lifer. The only CEO in IBM's recent history was a guy that came from frickin' Nabisco that made a real change, who was an execution, like he was an execution guy. Like it's too much of the same. What do you call it? It's not genetics. It's like corporate nepotism, like inside corporation. Like it's a culture thing where like, this is how they operate. They need to change. That's just my 2 cents. Coming from the Valley, having literally been laughed out of a meeting for bringing up IBM, like this is my scar tissue.
I want to see what the actual numbers for IBM are.
It's there, dude. I'm just telling you, it doesn't matter. Their stigma in the heart of technology is gone too far. Like I'm not saying they're going bankrupt. I'm saying like they have a lot of work to do the change.
Absolutely. I'm just saying if they fall enough where the dividend gets to 5% again,
I'm just
extremely
pay the dividend, dude.
So you really think that the dividend's going away?
Yeah. I'm not biased at all, Hollis.
I'm not seeing it.
It's not like Hollis. It's not like I worked for the nation's largest IBM reseller in recent years. In fact, though, I did. So I have a talking point here. Like I know what
I get it.
I'm talking about.
I get it. It's just not showing up in the numbers yet. And that doesn't mean it won't show up in the future.
Steve said
the reality is right now they're doing about 12.7 billion in free cash flow. And
the free cash flow. Listen, the current CEO got his job based on like the Red Hat acquisition. Red Hat was like a darling of the Valley. They were growing over like well over 50% at the time. And the guy who's at the helm did it like he saw that. He was like, let me take this for a ride. Let me architect the entire growth engine of IBM as an entire corporation. And he bought that Red Hat for I think like $35 billion. Since that acquisition, he's then been promoted to CEO, and Red Hat has cut their growth rate literally in half. So like, it's just more of the same. I can't. Although he did spin off Kyndryl, which was just a horrible business. I think
he also acquired 3 AI companies in the past 2 years,
and every one of those has lost money. Is what I'm saying. We need a different one of them. Like they're overpay. They know they need to. It's not, and the problem at IBM is like, it's not that they don't have talented people. They have really good people. Like they have Buffett. Someone said Buffett bought IBM long before Apple. Even Buffett, and I don't blame anybody for saying that's worth a shot, because even Buffett said it's probably worth a shot. And then he changed his mind, sold it for a loss, and said I was wrong. I'm just saying that was a long time ago. But it's not that they can't turn around. It's that there's a lot more work than people think. Their stigma has to change. Like you can't have people being laughed out of a meeting in Silicon Valley trying to get IBM to a seat at the table. And when you do, and I remember this like vividly, I got them to the table. I get a quote for like a massive build out, and it's literally 2-3 times more expensive. I'm like, you guys. you guys. You embarrass me, ruin my relationship, and you want to come back at me and be like, oh, we're Big Blue. We're the best. We're never going to fail. Like,
Big Blue, baby.
People don't get fired for buying IBM. And I'm like, what guys? like, it was bad. Like, I can't put that in front of my customer. But
man, Big Blue.
Hey, look, they are trying. My point is, though, that they have very smart people, very talented employees. I think that they have, and they even have the products, dude. But they have to price their products so high that like they price themselves out. They don't understand some of the like dynamics from that perspective in the where they need to be. I think they have a shot, but it's gonna be like they can get an at bat. They just need to. They need something different, something spicy, because they have an entire. I think it's storage scale specifically built for AI. They sell infrastructure, guys, like a lot of it. Yeah, they're just like it's the mainframe. I think they know is dying. Nobody writes COBOL. Claude will write COBOL for you. So like, there's not really a big moat there necessarily, and I think they know that. But they're stuck in a rock and a hard place. I think they're, dude, if anybody can come out, oh my God. Okay, here's a bull case. By the way, this is peak bearishness on IBM, so I'm probably marking a local low. It will probably go up because I'm so bearish. But what if, Steven,
okay,
IBM comes out and says, we have just removed ourselves from the AI arms race. We are not going to win. But we have so much gear and we have so many data centers, which they do. Probably one of the largest footprints out there now that I think about it. We, like Meta, are going to sell our existing infrastructure to OpenAI and Anthropic. And here's the PO to prove it. What if that happens? Then it's a big long, boys and girls. I'm just saying.
IBM becoming a neocloud?
Yes. That would be the deal. Like that.
I don't hate it.
There you go.
I don't hate it.
There's the bull case, though.
I don't hate it. Oh, look at this guy. Look at this guy. Conspiracy.
Yeah.
Amit, if you want to join Conspiracy Alley, come on down. I got a couple of conspiracies.
Is that the new podcast? Like, we're gonna call it like Conspiracy Alley,
dude,
or something?
Why don't we do that? Let's make tinfoil hats and come out with Conspiracy Alley. We can talk about flat Earth. We can talk about the moon landing, the ice wall in Antarctica.
Both of those things are like, isn't the Earth flat and the moon we didn't land? I don't know.
Dude, I'm just saying, like, I clicked on.
We can get some quarters, some rolls of quarters, and some Pokemon cards while we're at it. Like, bro.
Conspiracies After Dark. I clicked on some conspiracy thing on Instagram one day.
Yeah.
It screwed up my whole algorithm because it was so crazy that I sent it to somebody. The next thing I know, the conspiracy stuff wouldn't leave my phone for a good like 3 weeks.
Hey, well, so that's who is that? Trade Desk doing that to you?
Oh my God. I gotta tell you, there was some woman on there talking about
dude, look at
what is the term that you
breaking 120. This is brutal. I'm just watching the market flip like as we speak.
What is on here?
Oh, my SpaceX 117. What? Oh, you don't know about this stuff. This is we teach this stuff in the school, but these are what we call internals. Here, it's so this is the net flows of the market live. So I can see like when this is SPY market. So 0 is like we're neutral. So probably not a great time to trade, which is why I'm totally fine here. But but this is NASDAQ. NASDAQ, like as we were talking, dude, just flipped negative. That's the flippening. Yeah. ADQD is NASDAQ advanced. Oh yeah, this is flip it into reverse. Well, I mean, it can't go too far reverse. Yeah, decliners accelerating.
The chip companies are all up right now. Now,
Yeah,
the
yeah.
problem is oil's at 87.
It's broadly.
Oil's at 87, which I don't like.
Dude, you know, hot take, oil goes back to 100.
Not why is that a hot take?
Is it not a hot take?
Not a hot take.
Oh wow. Okay.
No, not a hot take. At this point, it would have been a hot take last week. This week, I think it's completely plausible.
Yeah. So I think so that is actually the coolest part is that right now we don't have any Feds in a blackout period, right? But the only thing, if it was not for the Fed being in a blackout period, these are internals. We just have earnings to look forward to. But but Trump wants to dink around, and now we have to deal with like potential war headlines at the same time. So like, you know, if it wasn't for that, this could be like a really good setup. While the SpaceX cracks 120, man. Hoodie, Cleveland Cliffs report soon.
I did not get on the train. You love that pick.
It's worth a shot. I think it's worth a call option. It's literally right here. It's like tonight, tomorrow. What's the worst that can happen, dude? So like same principle, same concept. Expect it to drop. Hope it does. Expect, don't do anything, but like it's worth the shot. It's worth the shot. Risk to reward. I'm happy there. Yeah. As we see, Googs coming in a little hot. Nvidia probably Nvidia's at the first level, 213. She should stop here. Oh, look at that. She stopped on a dime. You know, this is why they like my levels are like, that's gross.
They're right on.
Like to the it's not to the penny, but it's
it's to the dollar though.
Yeah, roughly.
Right on.
I got more for Broadcom. Little bit, not a lot of bit. The one I had this pulled in, so maybe this retest, this AAOI comes in, probably retest that $100 ish range. If she can hold, this is the one where like the highest beta. Where like if this comes in and retests and holds, and then rippy, that could be the face rippers. What do we got out there today? Hoodie coming in hot. Was the best. Super micro holding 22%. Dell getting the sympathy trade, which was on there. EQT. What happened?
Good energy company.
Earnings. Nat gas.
Yep.
Fell. So this is interesting. EQT raised production guidance, but and lowered capex with strong free cash flow, new contracts. What did I just read? It fell. Revenue fell year over year. Revenue miss. Raised production guidance. Like this is technically a miss. Stock goes up. That's likely the bottom end. Oh, dude, we need to. This is our VG. This is your next decade. This is literally what we just said. Look at all this. This is VG.
VG's doing great.
Literally said that just now. Holy crap. She goes back. Oh, that's a really good setup. That's a really, really good setup into earnings. This is continuation. I don't want to do that. NRG, CEG, yeah, all the energy catching a bid right here, right now, and a little retail. Do you see Philip Morris? Do you see me, guys?
Dude, I'm a big Philip Morris fan. You know that.
Really? You're a smoker? I didn't know that.
I don't smoke, but
You're into nicotine?
I follow the company. I'm actually invested in Altria Group.
Dang. Look at this deer holding.
John Deere's a AI company now, no?
You know, this could be one of those asymmetric bets. I would have to go into the earnings transcripts and find this out, but I'll tell you what, from a technical perspective, if this is over 620, which it looks like it's going to be, this this looks like an extremely powerful breakout setting up. That looks like a really good setup from a chart perspective, better than most of the others that we've seen so far. This utilities, dude, Pacific. This is my utility company is like, dude, these guys just rake everybody over the coals. AT&T. I think that connectivity like Verizon, T-Mobile, and all that is going to be like really important in the next phase of this VST.
Do you think SpaceX can disrupt those companies?
Yeah. In like 30, 20 years, or like when we're retired, I think it's possible. I mean, this is the copper. Here's your copper trade, dude. Your copper trade. Was it you?
Yep.
Yeah, copper is looking quite nice here. SCCO.
Copper went over $6 a pound.
Yeah. I think gold is probably not going to do well, or the gold miners. These guys are nearly at if I'm going to be short anything, like this is probably the sector that I'm shorting, GDX as a whole. But NEM is going to report like tomorrow. Mostly because like their gas is fuel, is their biggest cost. And gold is kind of topped out. Generally speaking, I think this is in the 80s. Gold is mostly topped out near term. You get a little bit of a bounce coming into resistance here. 386 is potentially into 4. Like you could get this, but this potentially is a setup for down further. And these miners, these gold miners specifically, are the ones I would be worried about the most, because with oil being their biggest cost going higher and gold having topped out already, I mean, you start to see it in the charts. This is a little skeechy. It does not bode well for them long term. But NVIDIA did those GDX, the miners. Oh my goodness. The leverage gas. There's your Freeport. Yeah, oil's going higher, dude. Broadcom, nice base. This is utility. I actually really like this utility.
Oh, you know why oil is going higher? I'm going to show you.
Look at this chart, dude.
Hold on. This happened about an hour, 2 hours ago.
Hey, Amit.
Yeah, good morning, Carl. President Trump was on his way to Dover, Delaware this morning when he stopped to talk to reporters, insisting that he has the support of the American people for the war in Iran and the effort to keep Iran from getting a nuclear weapon. Here's what he said.
Well, Americans aren't against the war. A poll just came out. Americans don't want high gasoline prices, but they're not against the war. That just came out loud and clear in a poll. Nobody wants Iran to have a nuclear weapon.
The president also made additional threats to Iran this morning on social media, writing, "From this point forward, anytime the Islamic Republic of Iran shoots at a ship in the Strait of Hormuz, whether it be by missile, rocket, drone, or any other device or weapon, the United States will bomb and destroy one bridge or power plant, including those located next to or in the capital city of Tehran." Now, all that comes as oil prices appear to react overnight to comments by Secretary of State Marco Rubio after the 11th consecutive night of U.S. strikes in Iran. Rubio said the U.S. would love to reach a diplomatic settlement with Iran, but he added that right now they don't seem to be serious. He also accused the Iranians of being the ones to violate the memorandum of understanding between the two countries that was negotiated earlier this summer. The Iranians, for their part, guys, of course, they've accused the United States of being the one to violate the deal. Back over to you.
Meantime, in D.C., Eamon, there's the money issue. Where the House is going to shoot for a reconciliation vote this afternoon, and then the Secretary of War on the Hill yesterday asking for another $67 billion. Are we starting to read some tea leaves on the at least the Senate's willingness to pay for that?
Craziness. So, yes, oil go back to 100.
You remember that one stock? I was like, "This is our DMs." I was like, "Steve, don't you like these things?" This was at Funko.
Yes.
And I was like, "They told me you like to buy these things. Imagine."
Dude, I got two of them right there. I got Luca and
Yeah,
Judge right there.
And I said, "Imagine if this was a long." at $3.78. Just saying, it's sometimes it's good to have a friend that gives you these kind of.
I'm just saying,
literally doubled, and it's still going.
Dude, I'm a piker. What can I say?
Thank you, everybody, for supporting Funko, Steve's, side hobby.
It's true. It's very true.
Yeah. I don't hate him. So yeah, Q's he's not a good look. We'll see. It's all coming down to earnings here.
Yeah, we're gonna get earnings in about hour and 40 minutes from now or so.
Yeah. I have been saying for the last 2 weeks, this is probably like a great time to sit on your hands. Like at the high level, index level. I think that remains the case. Look at Nvidia still trying to go.
I love it.
SpaceX coming in hot. I got 111 in change coming in.
I wonder if anything has changed on the combine.
I don't know, but when Qualcomm goes, she's up 1% today. But I'm just saying, this little setup on the Qualcomm, pretty sure short interest has gone nearly away as we approach earnings. It's going to be quite interesting.
Fundamentally, Qualcomm is so strong right now. If I had to make a 5-year bet, Qualcomm's the one right now.
Honestly, like 5-year bet, like my stock draft is very close to where I would be. I like Global Foundries, literally here now. Cadence, I'm happy with. Honeywell, it's a bunch of people ask me, did I actually draft Honeywell proper or Honeywell Aerospace? I wanted Honeywell, the original corp, not necessarily Honeywell Aerospace. Aerospace was a nice to have. Corning is just like stick through it. I like this. Oh yeah, Netflix. If Netflix is 50, I might go for it. How's your Uber doing? Baba's green.
It's doing all right. I mean,
it's coming in.
Uber's now negative, but Baba's my number one company right now.
Well, yeah, it's down today. We'll see. That can change. We got another 12 months almost.
We do.
Remember last year Maddie was in the lead for like 9 months.
I know.
Fell like right at the end. That's so brutal. You got Broadcom though. That's good. TSM.
I think Broadcom will do well.
TSM not bad.
I do believe Broadcom will do very well.
MP, dude, MP is not doing great for you, but it should bounce anytime. The only one that's like Pepsi. What do you think about these GLP-1s disrupting the snack business here?
I'm not really that worried about it.
The dollar.
I'm just not worried about it. I don't know.
I don't have my GLP-1 yet. Mama's calling though. I got to go.
All right.
It's been real.
Thank you for coming on. Everybody appreciate it.
Yes. If you're in the server, I will see you tonight for coaching. Did you see, before we go, did you see our site, Steve? I got it. We launched the portfolio challenge for free. You just type in papergains.com or school. Just share my screen for a second. I would just type papergains.com, literally just like that. But there is a little tab up here that says portfolio. And they launched, we're testing it, a portfolio challenge. Rach is in the house. She took last week. And it's every week. I think today, if they're doing it, they get a rebalance also. But you can check the leaderboard at any time. Currently, these are the leaders.
Love it.
And you can see what they have at any time also. Very cool statistics. And then you click something like biggest comeback, right? Biggest daily winner. 80% of the crew is in the green. They're destroying the combine.
Hollis said for you to check your Discord DM.
I don't have a Discord DM from Hollis.
Hollis, you may want to check what Jason your
yeah. And like
DMs to.
Most popular pick, 20 out of 53 in the test run here. Nebius. There you go. Nebius.
Love it.
Best single pick ever. AEHR. Crazy. All right. Well, that's all I got, guys. Papergames.com. It's free. Also, if you want to swing by, join the server. It's also free. And we give you a bunch of free stuff.
Listen, free stuff is for me.
Yes. And I will see you on in August.
You guys are coming in what, the first weekend, I think?
Yeah. For a little bit.
I will be here.
Yep.
All right.
Cool.
Sounds good. Thank you for joining.
All right, guys. Adios.
All right. Please go follow Jason, everybody. Let's take a look at what the market is doing. So we got SMCI still up over 20%. Venture Global making a move. CoreWeave 82.72. Oil is above 87. I hate it, but it's going to be okay. NVIDIA 213.56. It's running. What happens after earnings for Alphabet tonight is anybody's guess. I will be back at 8 o'clock tonight. I will be back to go over everything. Nebius 223, Broadcom 396, Marvell 212, Qualcomm 175.95. Energy Transfer 2044, got a big distribution out of that. IREN is up a little bit. Then we got Google flat into earnings. Flat. Uber 70.53. It's the biggest loser. Still Reddit. Palantir 123.99. ServiceNow 95.55. Zeta 20. SpaceX 117. Holy shnikey. We got to go to the other chart. We got to see what this candle's all about right now. Oh, man. That's what we call ugly. Ugly. 117. I don't even know what to say we're going to do there. That's just wild. Well, I guess I have to dollar cost average for my nephew. So he's not a bag holder. Oh. No bueno. All right, we got Salesforce 163. That's not good. SoFi 1708. Meta 625. I think it is what it is. Look, it is 243 on a Wednesday. We got Tesla. We got Alphabet. I'm going to go get some lunch. Thank you, everybody, for being here. I really appreciate it. I'm going to go get lunch. I'm going to go get energized. And I'll see everybody tonight at 8 o'clock. I am not doing anything this afternoon. I will be back at 8 to break down everything. Thank you, everybody, for being here. I really appreciate it. Have a great rest of the afternoon. If you're going over to Tanner's stream, spam him with sleepy sleep. Thank you very much. Really appreciate it. And if you want to do me a favor, like and subscribe. Helps me out a lot. Thank you very much.